Welcome to Trade Live with IG. It is Wednesday, February the 12th. Very good. How are we? You haven't had a great start to the morning, have you, Ronaldo?
No, I have not. So usually, as you all know, I'm a very active person. I wake up 4 a.m. to go to the gym before work, come in here so I can look at least closely as good as you, Rich. But today I hit the snooze button for 5 minutes at 4 a.m. and I ended up, when I checked the clock the next time, it was 6 a.m. So not the best morning today, but I'm here with you, with my trader friends, so we're ready to make the best of it.
And you can do your hair at the break as well.
Yeah. Okay, no need to comment on that.
Do you not set a double alert? So I'm 5:40 and 5:43.
And so 3 minutes, so you don't snooze, you just turn it off.
No, but if you snooze the first one, the second one.
Oh, you're ahead of the game.
25 years experience of getting up at 5 a.m.
Yeah, you've lived long enough to learn.
So that's the thing. So how did you feel when you woke up at 6 then?
I felt like absolute rubbish, mate. I'm not even gonna lie to you. I felt like
instant heart attack.
Yeah. Oh fuck, Fred's gonna kill me.
Oh wow!
Sorry.
So that thing's a camera. Yeah. That when there's a light on, it means you're on air.
It's YouTube, right? It's YouTube. You can. It's not BBC.
Yeah. It was. So we've actually yesterday we sat and had a chat and we was like, well, okay. Shall we start putting some sound effects into the show? So I'm not sure if we got the sound effect there, but that was definitely an opportunity to try it for the first time. Oh dear, there's never a dull moment. Right, now, so good morning to you all. Boise on the chat this morning. And also we've Supersonic given us some proper value add. I hadn't seen that downgrade of IAG. So please let us know where you saw that from, because that's useful. Don't like missing them. The other upgrades, downgrades, just while we're on it, AstraZeneca is a new overweight at Morgan Stanley, or as we call it in the business, a Ronnie. H&M has been cut. So Hennes Mauritz cut, and L'Oreal also cut to equal weight and a 379 target. But yes, let us know on that IAG. A second downgrade for IAG will certainly not help that price. Yesterday was a bit bizarre. We'll go into that in a minute. Let's look at what's coming up on today's show.
8:40 a.m. we got Psychology of Trading with Isar Bhattacharya. And 8:58 a.m. we have all sessions opening bell with Mr. A.A. Ron Bright. And what did we end the day with, Rich?
And that is 9:20 a.m. market measures with myself and Elliot Harris. So on that, yes, we have listened to the people, the voice of the people, and we are starting a brand new beginners course on Thursday. Market measures will go right back to the start, and we can all learn options together, including me.
Yeah.
So that's going to start Thursday morning.
I might have to listen to that as well, so I actually understand what you're talking about when you're talking about option strategies.
No, we do. Sorry, yeah, producer Fred, we just had an email from Ronnie's mum. He apologises for his language. I hope nobody was offended by this.
I am deeply sorry for my actions.
Maybe it's different in Scandinavia, isn't it?
Yeah, it's way more acceptable there.
Yeah, that's good morning. Right, what is happening in the world out there? Let's look at it with overnight action. Right, let's go straight to the Times, because the Times, again, having a go at Rachel Reeves. It's getting a little bit dull. She may be forced to raise taxes. That's coming from a think tank. And this think tank is the National Institute of Economic and Social Research. And they've produced this research, but they've forgotten to do their updates.
Oh, brilliant.
So they've said that Reeves is going to run out of room on her fiscal headroom, but then it goes on through the article in paragraph 6 to say that is presuming that there's only one more Bank of England rate cut for the year. Well, that's wrong.
Yeah.
Most investment banks are talking about another 3.
We've already seen one.
One more, sorry.
Oh, one
Yeah,
in
more.
addition, yeah.
And also that there's 60% tariffs put on China. Like, why do they just get to make up numbers? Nobody's talking
60%
about
tariffs on
Exactly.
China. That's a bit rich.
So it's one of those ones when you've done all your assumptions back at university or whatever, and then you've done it, but you don't update the sums before you hand it in.
Yeah. Some intern forgot to update the model, and they just decided to go with it.
Yeah.
And it's also a bit poor of the FT to publish it.
It was the Times.
Oh, even worse.
So
Explains a lot then.
yeah, but just this this media. It's like the news in from Zelensky overnight. Have you seen this?
I have not.
So be very wary on buying this story that the headline is Zelensky prepared to give up land in order for a peace deal with Russia.
You know what? I can see that happening.
You can see it happening, but it's certainly he's not going to offer it.
No, but pre-Trump election, he was saying we're never going to give any land up. As soon as Trump got elected, the discussion switched from if we end like the way it is now, we would be happy with that. So,
okay, so this is exactly what people across the country are going to be doing this morning, and that's the thought process.
yeah,
What land do you think he could give up?
probably what they've lost so far.
So as in eastern Ukraine?
Yeah,
No.
no,
The story is if anybody actually reads articles anymore
not me.
and not just trade on headlines, right, which is what people will do this morning. Forexco will probably be up 20% on this story. What Zelensky's actually said, he will give up the part of Russia in Kursk that he's invaded.
Oh, mate.
So all he's saying is we'll get out of Russia if Russia get out of Ukraine. I don't think that's going to get to a peace talk.
That's a different trade. Yeah, I wouldn't take that trade.
So
if I was Putin.
there's a real danger that people pile into this saying that there's going to be a peace deal when that's just not the story at all. So yeah, be wary this morning in those Ukraine basket stocks that we spoke about last week, the peace deal basket of UBS.
Yes, that's why we sell the rumor, buy the fact.
Right, what else have we got? We've got a great story in the Times where BP yesterday actually changed the name of the Gulf of Mexico in their results to the Deepwater Horizon disaster in the Gulf of America.
Oh,
I'm not sure that's quite what Trump was going for, that the biggest, worst sea life disaster of all time, as well as the people who lost their lives,
yeah.
would be known as the Gulf of America disaster.
Well, I think, yes, I don't think he's very happy about that, it being associated with that, but I think he's happy with the fact that they're using the term. And I think this just continues the theme of CEOs and business leaders getting in line to kiss the ring of Trump.
This is just going from better to better.
I mean, it's true. I think they do.
Oh, we've got it. We've got the new sound effects are in full effect here. Brilliant. That also goes along with the story this morning that there is a bill going through US government to rebrand Greenland.
To the rebranding.
Genuinely, to call it red, white, and blue land. That is a genuine thing happening in America right now.
God bless America.
So Denmark have offered America Greenland if they can have California in return.
Seriously?
Yes. This is, it's the second day running. Musk offering to buy OpenAI,
Yeah.
and Sam Altman gets Twitter, for a tenth of the price, and now Greenland swapping for California. So Coca-Cola having a bit of a shocker with Costa Coffee. So the coffee shop chain, we did actually used to go to Costa. I prefer Costa to Starbucks any day of the week, but it has been singled out as the poor performer by Coca-Cola in its quarterly results, which were out yesterday. The coffee declined 1% for the quarter and 3% for the full year, primarily due to the performance of Costa in the United Kingdom. Which one would be your chosen coffee?
The one that's free in the office is my chosen coffee. But I do remember when Coca-Cola made its acquisition, I thought it was a bit of a strange one because it's not really their core business. But I could see the value of them of having sort of directed-to-consumer platform in Costa, but I don't think they've really utilized it in the way that they should have. But I still think there's overall business value to having a chain that's direct-to-consumer, but I think this is sort of the problem with quarterly reports, that we just get focused on the small numbers and not the actual bigger picture. So I'm with Berkshire on this one, and I'm longing cola.
You're a happy holder.
I am.
Right, so that is the main stories of the Times. What about the Financial Times? Well, China tech stocks have entered a bull market. If you had bought them on that very first Monday of the DeepSeek, then you would be up more than 20%.
What is it? Alibaba's, the Tencents?
Yeah, all the K-Web stocks.
Yeah.
Really, let's go in.
Alibaba had a good night as well, up 6.6%, was it, after the new Apple collaboration?
That's exactly it, yeah, for the new AI on Apple phones. So only Chinese internet companies are globally competitive and comparable to the US Magnificent Seven, said the investment manager for Chinese equities at Aberdeen.
Aberdeen.
There are your favorite place.
That is the best city in the UK. But yes.
I'll let you away with that. If you had said Scotland, I would have taken offence. But I'll let you away with the UK.
Best city in the UK, 100%. But I think it's quite interesting to look over to Asia, because it's been sort of slumbering these last years. But then now we've seen a new IPO boom in Hong Kong.
Really?
So they have 2 IPOs coming up. One of them being one of the biggest electric battery car makers. If I can look through my unorganized notes and see the name of the stock, I'll get back to you on that one.
We'll come back to that.
Yeah.
Well, quickly, there's K-Webs on the graph for you while you search your notes there, Ronaldo. But you can see we had that huge spike. Look at how much beta this thing has. I mean, that was back on the stimulus, and we went from 18 to 20, nearly 27. So it was a 50% on the stimulus. This, since DeepSeek, Monday the 13th of January, it's only gone 20% there. So yeah, that's
and while Rich has done us the favor of going to the chart, I have found the name of the company that's going public in Hong Kong, which is Amperex Technology, ticker CATL, the largest electric vehicle battery producer in the world. And they filed their listing on Hong Kong Stock Exchange, and it's looking to be around $5 billion, which will be the biggest IPO in Hong Kong for the last 5 years.
Wow, excellent. And when's that? That's next week?
They've filed for it now, so
okay.
I'm not quite sure when it will be, but it's in the making, so keep an eye on that one.
There is also a story in the Financial Times, I guess a more in-depth piece. Can Trump make Bitcoin useful? So that is well worth. If you're a big crypto fan, that's worth looking into. FT's done a lot of work on that. And the final story, and my girlfriend's going to be angry from that. I really hope this doesn't make its way to the ski slopes, because the EU is weighing temporary gas price cap to counter diverging costs with US. This drives her crazy. This is why she left the ECB. She was working at, first of all, not Deutsche Bank, the Bundesbank, and then ECB, and she said she will never work for a European institution again because of things like this, getting in the way of free markets.
We love a libertarian.
No, she's capitalist down to an absolute.
Oh, even better. Even better.
Free
markets for everything.
And this is interesting because we do actually trade this. And you'll see this morning not having too much effect there. This is the EU natural gas price. on a 1 minute basis. So sorry, that's yesterday. We should have a look at it a little bit further out. Let's go to the 1 hour. You can see here, so it dropped yesterday. This story broke yesterday. We dropped from 58 down to 56.5. But will the EU interfere with free markets? That story in the FT this morning. Right, Ronnie, it is 7:45. We've got a few messages in the chat. Let's have a look at what our dream team are saying this morning. Gavin Ackers, Ronnie on form. He must be watching yesterday's show. Good morning, Funky Gibbon. Boise, rightly saying, if you go to Google Maps and you can leave a review for the Gulf of America saying better before the rebrand. There is no rebrand in Mexico. So if you're in Mexico, and you go on Google, then it's still called the Gulf of Mexico. Anywhere in the rest of the world, you get both names, Gulf of Mexico, brackets, Gulf of America. Has the correction started for the Tech 100? Asks Funky Gibbon. From your lips to God's ears, let's have a look at yesterday's price action in the stock of the US.
Spot 0.36% was it yesterday? Closed down?
That's a really interesting. I wouldn't know what to make of that if I was Axel. Where does it go next? Who knows? Yeah, it's a long period of consolidation actually. The whole year has just been a period of consolidation. So, right, that's the Tech 100.
If you look at, so it's sort of the opposite of what's happening to last year. So last year we had the Mag 7 and then the S&P 493. This year, the Mag 7 has underperformed the S&P 493 compared to the other ones.
And rightly so.
Yeah, and rightly so, absolutely.
It's not like we talked about it the whole of November and December.
If someone's on form today, it's Rich. So it's interesting to see the corrections coming on, and they're still trading at a very big valuation, high valuation, but I think it's kind of interesting to see that we're now looking towards other companies in the S&P 500. So we'll see what happens with the Mag 7s, but it's all coming down to the sort of commercialization of AI, I think, because we've seen the disruption with DeepSeek. Now we have to see how they can actually counteract this.
Yeah. Sorry, I'm just trying to pull up. I wasn't ignoring you, Ronnie. Just trying to pull up an S&P equal weight. Doesn't go back far enough, really. Yeah, so the S&P equal weight. What would you rather be in? Personally, I don't think I've got any position in S&P, Nasdaq, Russell 2000, or the equal weight at the moment. I'm waiting to see this number today. This is a huge CPI today. Absolutely huge.
It's a massive one. I'm waiting for the Bloomberg the Bloomberg terminal to go off with the announcement. I'm a bit worried about this one because if we get CPI's figures that come in hotter than expected, we're just gonna. I think we can say goodbye to a rate cut this year in America.
Yeah, because this is pivotal. A pivotal moment. If we just want to look at the expectations there, 0.3. Now, if it comes in at 0.3, of course, 12 times 0.3, Ronnie, even you know that one.
Yeah, exactly. 0.4.
So, are we tracking for a 3.1, 3.2% core inflation rate year on year, right? Or are we going to see it drop to 0.2 or stay at 0.2? The headline inflation rate expected 2.9. If these are warmer, even if it comes in at 0.3, that's still not a step in the right direction. But if these are warmer before we get tariffs applied, then the rate, as you say, the rate cuts are gone.
Yeah, no, absolutely. It's something that's going to be, affecting not only the American economy, of course, but it's going to have, trickle down effects on the countries that trade with America. So with the tariffs and higher rates for longer, I'm wondering if we see the end of American exceptionalism.
Oof, oh, that's a big call.
Hey, that's what I'm here for, the big calls.
So we've got a 10-year at 454 going into this. We've got a 2-year at 429. That was 428 yesterday. But you know, it's all about today, because this CPI shapes the next Fed meeting.
Yeah.
It shapes, as Ronnie rightly says, what are the chances of the inflation expectations that we've seen recently in numbers come true, that the trajectory is upwards rather than back towards 2%.
Yeah.
And, you know, an hour and a half after it comes out, we got Powell on the Hill talking yet again.
The charismatic Powell.
He actually is. If you get him off camera and speaking normally, he is actually.
You would know
lot
when
more
you guys hang out. You mean?
No, Angeline.
Oh, okay.
Angeline
Sorry.
met him in Davos and had dinner.
Oh, right. So your invitation got lost in the mail, did it?
Right. Morning, Angeline. Yeah.
We hear her in the background.
Yeah, I can hear you. Right, DAX is 22,100. What is going on? Is somebody bidding for the DAX? Is that what's going on?
I mean, DAX has always been. Isn't DAX always one of our most? I think DAX is, if you look at IG sort of trading.
Well, top 100 traders will have you short at the moment.
Exactly. It's always one that's shorted. So looking at the DAX, I think a lot of people think, oh, this has to come back down. But when Axel held a training session for us once, he showed us a graph of US Tech 100, and then he said, he removed the names of everything, and he said, what's going to happen with this next? And everyone raised their hand and said, it's going to come back down.
Yeah, mean reversion.
Yeah, and then he said, why? Like, why will it come down? Like, what's calling for it? And it's the same with DAX.
Well, this is going to come down because the EU's about to pick a fight with Trump.
Oh,
so
man.
there's a meeting today between Canada and the EU, and it's to work out what their joint response will be against these steel and aluminium tariffs. And do you know what they've threatened to put tariffs on?
Bourbon.
And Harley Davidsons.
Yeah, but they did that before as well. They're trying to hit classic American goods.
Yeah.
I mean...
But he's not going to like that. And then he's going to come in for the German autos. We know that the German autos, he's coming for them.
Yeah, and they've already had a tough time, but the American autos aren't having a good time either. And with a 25% tariff on imported aluminium and steel, they're not going to be able to produce their cars at the cost that they want.
Yeah.
With Chinese competition coming in, it's not looking good for Detroit.
Well, no, they just get domestic steel though.
Yeah, but
that's why Cleveland was up 17%.
Yeah, but last time they had the tariffs on aluminium and steel, they had to get exemptions because they couldn't get a certain level of high-grade steel and aluminium from American producers.
Yeah. Yeah, very true. Let's look at the numbers we've had this morning. Are you lot Heineken drinkers?
Heineken 0.0.
Heineken 0.0. So you'll wish you were in a different kind of Heineken today. In that stock, up 7% this morning. Heineken, excellent set of results. Organic beer volume up 1.6%. The estimate was 1.4. Can you find a more Dutch-sounding name than the CEO of Heineken?
What's his name?
Where have I written this? It's Dolf van der Brink.
Yeah, that sounds like old money.
Dolf van der
sounds like
Brink.
he was raised on a golf court.
Yeah. What else? Pre-markets. Otherwise, we've got the miners looking up 1%. Strong iron ore move overnight, up 1.7%. So Rios and BHP will be strong there. We've got Voalstalpine down 3%. They've cut their EBITDA forecasts. And let's see, we'll get the UK names for you shortly. Barrett Redrow, first half revenues are 2.28 billion, planning a 50 million sterling buyback and looking up 2% in the pre-market. So 2% in the pre-market, Barrett Redrow. Should we go to a little break?
I think I need one, mate.
2 minutes, and Ronnie's going to go and wash his mouth out.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
And we're back, Ronnie. We're back with Jugger saying morning all. I don't recall seeing that name in the comments before, so very good morning to you. Good morning to everybody out there that is driving their kids to school, like our good friend Jamie and also Ursula as well. A lot of people listen to us in the car on the way to work.
That's very good. That's very good of them. Are you driving your kids to school as well, Rich?
driving the kids to school. We had Sarah Riley come in yesterday afternoon. Remember, Sarah's been on the show once. Had baby Charlotte, of course. Sarah's a PCM, the best PCM here. And
I'm not PCM, that's
currently on maternity. And I got to hold Charlotte.
Oh, wow.
Oh my goodness.
Did it give you the baby fever?
I must admit it did, yes. Yeah.
It's about time, mate.
Yeah, to be fair.
Tick.
I think I've already worked out that when they finally leave school to go to university, I'd be, 65? Oh, 65, wow.
Back in 65, that's when you left.
Which means I'll have to keep on working here to pay their fees as well. Right, good morning, Julian. Believe that share buybacks should be made illegal. That is what Ronnie thinks as well.
Yeah. I like that, Julian. I like the way you think, Julian. I'm going to reply to him.
Yeah. They're watching you. You can just speak to the camera. Yeah, you don't have to.
Well, now he got a double reply.
What are you doing? Right. Peter Ward says, thankfully there are no kids watching, and he's now messaged me saying his kids are crying. One of the kids.
Oh, I'm sure
of Pete's clients. I've had to pull over to console them because they haven't heard these words before from the angry Scandinavian.
The F-bomb. Sorry about that, kids.
Right, so this morning we're going to watch Barrett Redrow. Legals, my goodness, got absolutely murdered. I think there was some kind of basket in the UK yesterday because there were certain names that got smashed, including Vodafone. We said it here. Actually, let's take a quick look at how many shares were bought back yesterday. Can't believe I forgot to do that already. Feel free to fill in for a bit, Ronnie, while I'm finding that.
So Barrett Redrow has been one that is quite interesting while Rich looks at Vodafone that only he cares about.
Whoa, no, but you joke, but look at the volume of shares bought back yesterday. What are Goldman Sachs doing? They have gone rogue on this buyback. 37 million shares when the average is 9. And the stock was down as well. Ronnie, get ready to open the London Stock Exchange, please.
Oh, yes, I'm ready.
And go. We really have to have a think about why was Vodafone down 2.2% and they bought back 4 times the amount of shares that they're meant to.
Well, it's impossible that someone sold. Did the consumer or did the market sell more than 40 million shares?
Well,
They bought 40 million shares, right, Goldman?
yeah, but obviously that means somebody's selling into. So basically, somebody has come in and said, Goldman's, however many you want to buy, I'll match you.
I'll give it to
So
you.
that's been taken out.
You want some? I'll give it to you.
Right, Ferexpo is up on this crazy story. Where is it, Fred? Ferexpo is up on this story of peace, Zelensky offering a land deal in, there we go, 3%, a land deal. But be very careful on this. What he's offered is to retreat from Russia if Russia get out of Ukraine.
Yeah, which is not a deal Putin will take.
That's going to get laughed out of. So Ferexpo up 3%. Right, let's see. No trade on Barrett yet. That's looking like it's going to be a strong one there, Barrett. But we do have land securities up too. JD Sports, Andrew McKelvey talking about that this morning. Were you saying that there was, it looks like it's formed a, yeah.
JD Sport, 1.8% up. I saw that there were some talks in the comment.
There we go. Is JD Sports no longer in a downtrend? No lower low yesterday. It looks like they're responding to that today.
Yeah.
Also, Nike had a decent last couple of days as well, back above $70.
Nike, one stock that we agree on, but in JD Sports, I'm surprised to see it, I have to admit. I'm not really sure what's fueled it, but what you better knowledge of JD Sports than me. What's fueled this recent?
I think it is literally like the guys are saying, that maybe a seller's done.
Yeah.
It's managed to hold those levels in the low to mid 80s very well, and now you're just getting this this lift. Don't know why it's up this morning, but we haven't seen an upgrade. IAG, that was one that we were talking about earlier. With we heard, was it Gavin that said that there was a second downgrade? Haven't seen that.
Yeah. Who downgraded it? Because it was heavily upgraded prior with price.
Goldman's downgraded it last week.
Okay, but no one.
But yeah, let's see how that trades this morning. But as at this, there we go. Bellway up 1.6 and Vistry up 1. That's what we're seeing so far.
No major news, but in Europe it's quite interesting to see that Kering is up almost 3%.
Well, Kering's up 3, but InBev, don't forget, on the back of Heineken results, is motoring. That's up 4.
Yeah, well, they're the world's largest beer producers, are they not?
Yeah, it must be.
Owner of Corona and a bunch of other brands, which I don't consume.
Right, Heineken up 8.6. Is that one open, Fred? Right, Heineken is open. Heineken holding.
NV.
Up 9.2. Is that the same as Heineken?
Tom, work from home. Any view on JP Morgan shorting Canal Plus? Yeah, I think they're doing the absolute right decision.
JP Morgan Asset Management. Don't get confused.
Whoever shorted it, they're doing the right thing. As I told Rich beforehand, it's an old classic dinosaur when it comes to media. And with the hot competition in streaming and modern media, they have nothing there to do. So
Heineken up 9%.
Yeah.
Yeah, but it has had a torrid time of it. Look at this terrible performance recently. So Heineken holding only just getting back up to the 64 level that it was back in November. But, what does that say for Diageo? Diageo, we know that Guinness has been going, wow, 21. Oh, hold me back. I would have been so wrong in this thing.
Ooh.
I could have been, I'm putting them in the pension.
Seriously?
Yeah.
Why? What's the rationale?
Well, as in, apart from the fact that they have Don Julio and Guinness and some of the best brands in the world of alcohol.
Yeah, but if we look at the consumer trends, they're going towards a lower consumption of alcohol.
Or is that is that media?
Yeah, by the time you retire, mate, it might even be illegal.
So yeah, 2180. Oh, that. Hold me back, because I would have been wrong. I would have bought them. In fact, I did buy them at 23.50. I would have bought them at 23.50, 22.50, 21.80, and
yeah. Now you're looking to catch a falling knife, are you?
oh, I want to though.
They
But
did.
up 60 basis points. InBev up 4%. Heineken up 7%, and Diageo can only muster a 60 basis point rally.
Well, Diageo has more diversification in their brand portfolio in spirits, rather than InBev are more focused on beer, and Heineken and.
Oh, really?
Well, you're asking me the question, mate.
I don't know. Up 60 basis points seems so 9.7 now on Heineken, 4.7 on InBev, 60 basis points on Diageo. What else? There we go. Right, Barrett, 9%.
Barrett.
What a morning for Barrett. Andrew McKelvey, are you in that stock?
They did beat. I have the Bloomberg first word from Barrett here. Shall I give it to you?
Go on.
You want to hear it?
Yes,
Only because you asked nicely.
please.
Right. So Barrett Redrow sees full year homes completed 16,800 to 17,200. Beat there. Deliver at least 100 million of cost synergies. Interim ordinary dividend up 25% to 5.5p. First half revenue GBP is 2.28 billion, where estimate was 2.16 billion. They beat there. Adjusted pre-tax profit was 167 million, while estimate was 192 million, so they missed there. Interim dividend now is up at 5.5%. So they beat on the most important thing, and I think what the market really appreciates here is that they saw over 100 million worth of synergies being realized there, while increasing the dividend. So Barrett, it's no wonder that they're flying the way that they are. What are they up, 9% now?
6.7. Since you managed to talk for 5 minutes on them, then they've sold off from the second you opened your mouth.
Sell the tip.
It's like, maybe if you stop, it might find some support and go back up, Ronnie.
Oh, mate, maybe. Seems like I've been talking a lot about Vodafone then lately.
Very good. Touche, Ronaldo, touche. I'm scared to bring Vodafone into it in case you start swearing again. So let's just look at this.
It was only once.
Right. God, Fred's starting to F-bomb in my ear now as well. What is going on this morning? Right, let's have a look at Vodafone over the past few days since those results, and we'll recap what has happened. The results were basically a warning in Germany, right? So you have that 7% move down, maybe a little bit overdone, but you know, we got down to a low of 64.80 was the realistic low. At 64.80, Goldman Sachs start coming in and launching the buyback, buying 28 million shares a day on average, which took them from 65 pence up to 70 pence. Yesterday, it looks like a seller has stepped in, and Goldman's have bought 37 million shares when they should be buying 9 million, and the seller stepped in and absolutely smashed it yesterday down to 68 pence. What happens next? This is such an interesting situation because you've got a buyback battle going on. The CFO has told you in his statement that this buyback will be done by May the 7th or earlier. The number of days between last Tuesday and May the 7th, if you divide the 480 million euros that they're buying back, it's 9 million shares a day. They bought 37 million yesterday. This buyback is going to be done by the end of February at this rate.
Right.
So what is going on, Goldman Sachs? Has somebody done their maths wrong? Has the CFO told you, go for your life? Are they going to re-announce another buyback to start earlier? Something is going on.
Well, what do you think? What's your theories, Rich? You're very closely connected to Vodafone.
I am, and this was always my argument along the buyback is going to affect this stock. And remembering they've got another 11% of the company to buy, right? So I'm all in favor of this. However, as soon as they're done and then there's no buyback, long story short, I don't trust Goldman Sachs.
Yeah. Well, when the sort of purchasing power from Goldman stops and they're not lifting it up and pushing that up, where's the resistance levels going to be?
Well, then that's, you mean the support?
The support, sorry, yeah.
No, I completely agree. That's why I'm saying, if you've lifted a stock from 65 to 70, right, you've moved the stock 8% for a reason. Either the CFO's told you to do it, or Goldman's have taken a view and they want to do it. Now, they get compensated if they beat the volume weighted average price over the time period.
Okay.
Right? So Goldman's are doing this intentionally to get themselves paid, which is what Goldman Sachs always do.
They would never do something like that. A banker? No.
So therefore, are they doing it because they've got a view in the stock and they think the stock is going to be above 70, so they wanted to get a good VWAP? Or is something else going on?
Time will tell, my friend.
It's very tricky to have a proper position. But if, exactly as Monkey Man says, what's going to happen when they stop buying? Well, that depends if we start to get some improvement in Germany, right? Are Goldman saying that the German election is going to happen at the end of this month, and then you get some fiscal stimulus in Germany, and therefore Germany starts to improve, and Vodafone share price will go up? Then they'll look very clever, and they'll make a lot of money.
That's a lot of ifs.
Well, it's not. It's one if.
Yeah.
If you get fiscal stimulus following a German
and
election.
Then that will naturally trickle down to Vodafone and consumers.
Of course it does. What do you think the German economy? What do you think drives the Vodafone business in Germany?
Yeah, I don't know. I don't think that Vodafone.
You don't think fiscal stimulus drives an economy?
No, I know fiscal stimulus drives an economy, but I don't think Vodafone will be the one that's picking up the majority of the gains from that.
It's literally what happens when you get economic growth.
Yeah, but
it's somebody who sells business-to-business contracts.
Because they're the only ones in Germany who's doing that.
There's 3 operators in Germany, yes, and they are the biggest one of the 3.
And they're going to take the other 2.
No, you'll start getting fiscal stimulus. It will breed.
I just don't think that the effect will be as big as we expect.
Yes, but the stock prices that in. That's the whole reason that we look at stocks and estimates.
That big if.
I'm just trying to get you to swear again.
Oh, it's not happening.
I think we were almost there. Oh, good stuff. Right. So that is the big question, right? We got to work out what is going on there and what happens, as Monkey Man says, when that stops. Other stories this morning. Barrett's now only up 5.5, Ronnie.
It's completely my fault.
Probably Diageo down on the day now, I would imagine. No, I'm only jesting. Where are we? BAE Systems down 1. BP down 90 basis points. And we didn't check Canal Plus for you.
Yes. Please.
Where are they?
What's going on with my favorite media company?
Where's... I know it's Greg's I've got in there. That's up 1.7%, Ronnie.
Canal Plus.
Canal Plus, yeah.
After the JP Morgan short.
That, but I don't know where this has come from. This was in the press on Friday.
Well, we're still below the levels you and I betted on.
Yes, no, I'll give you that one. And I still owe you lunch for it as well.
Well, you might recoup it with the gold trade.
Right, yeah, Canal Plus, what do we do there next? More importantly, what do I do in legals? Because I am getting murdered in legal in general. Look at this. This JIP yesterday was absolutely horrific yet again. So we see the original rally that got me all bulled up on this stock. You saw a recovery on Monday, which I thought, well, that's great. And I did let some go at the 245 level. But yesterday, look at this sell-off to close on the lows at 238.
And you're long in every one of these positions.
As in those are buys, yes.
Oh, mate. You're just breaking Axel's rules here. Never average into a losing position.
No, that was me building a position. It's not averaging into a losing position. It was establishing my position.
Okay.
If I bought them now, I would be averaging into a losing position.
Because when I look at the chart, I see you getting in at the top, getting in a bit below that, continuing. As the stock falls down, you keep buying more.
Yeah, but that's how you not DCA when you go in with specific prices to build a position, like when you build a position in Nvidia. These new sound effects. What have I done given the gallery the access?
Listen, for me, it sounds like you're using fancy traded talk to explain away that you averaged into a losing position.
But on a genuine thing, that is why you start with a small size, right? You start on a small size of something so you can actually build into it. I never buy 100% of a position in the first print, because then you'd have to, unless it's a very timely entry, unless you're thinking, you know, right, a headline's just come out, boom.
So you've taken a very long-term view of legal in general then?
This is, well, I mean, it's an 8% dividend, and the buyback, yet again, is for 7% of the company.
You love a buyback, don't you?
It's called a return to shareholders. That's why you buy shares, Ronnie.
Let's move on. What else do we have here on the?
We've right. Ronnie and I, before we go over the desk at each other this morning, I'm going to swap out in favour of Angeline, and I think you're going to introduce Angeline to fast markets.
Oh yes, I am. I have the pleasure of not sitting next to Rich, so yeah. Sorry, introducing Rich to Ange to fast markets. Yeah, I'm very excited.
Right, it is 8:17. One last look at FX and commodities. So we haven't had time to focus on our beautiful world of commodities. Iron ore was strong overnight. That's back up to 811. But you can see a bit of weakness in crude. Gold off the highs, Ronnie.
Yeah, I am like we saw in the comment section yesterday, and like we both agreed on yesterday, it's going to be a bit of a pullback, and it's not going to be a straight arrow up to 3,000. So I'm happy everyone agreed and was right on that one. I just needed to continue this pullback past April 2nd, so I don't have to buy Rich a dinner. But
was it a blow off top, do you think? We saw 29.40 trade, 29.70 on the April future.
Yeah, that was dangerous. But
oh my goodness, look at it hit the top of the thing.
Our bet is for the
oh my goodness.
Our bet is for the spot price.
Technical analysis actually works. Axel, I take it all back. Look at that.
Look at that, yeah, beauty.
That ain't bad, is it?
Ain't bad at all, pal.
And the reason I've got that chart on, and I actually forgot to look at it the other day, which is great. I put it on when it must have been November of last year, and that's what my bet was based upon, on it getting to 3,000, and it's got to my level, and I've done absolutely nothing about it. Brilliant. Actually, no, I did. I let a bit of my GLD go. Thank goodness. The calls. Good.
Thank you very much, Rich. Been a pleasure having you on.
And now, what's coming up next?
Now, fast markets are coming up with Ange, aka my favorite anchor at Trading.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Good morning again, and welcome back to IG Fast Market with Ange.
Loving your comment earlier. Lunch for the Ronnie. And we've had so many cool comments earlier. Thank you so much, trader friends. Made me chuckle as I was running across the bridge today. We had some viewers asking, where is this Trump ring?
Oh, yes. You know where it was.
Oh, in the bid. Right, let's talk about fast markets then. So lots moving around. Let's start off with a bit of beer first. Heineken.
Yeah, I am not very bullish on Heineken. I think they had a good result here. The stock is taken up. But if you look at a broader view of the chart, it's just coming back to levels that it was beforehand. It's not breaking new territory. So I'm not very positive of a long-term view on Heineken. Maybe a bit of punting, but nothing for me there. I'm staying away from Heineken. What do you think?
I agree. The thing with Heineken is this sector, especially Heineken as well, has had so many opportunities to shine, right?
Yeah.
But it just hasn't come through. And I'll show you, trader friends, by what I mean with this watch list that I have here handily under Brewers, if I can find that for you. But you'll see here that there's a long list on Anheuser-Busch as well, Molson Coors, Diageo. What tends tends to happen is that you have had this huge buildup, and I made a conscious decision to take a position after sort of like the lockdown 1 period, right? Everyone was stuck at home. But the thing is, you'll see, even with the others, it's a similar trajectory. I'm showing you Carlsberg here to Heineken. Do you drink Carlsberg?
No, I refuse Danish consumption.
Yeah, and then having a look at Diageo as well, because I have Diageo. Rich is speaking into my ear because he probably knows that I have it in my diversification, in the diversified part of my pension, and it is up just 43 basis points. But yet again, Diageo, if you take a look at the longer term chart, you would have thought, right? I mean, I was going, right, you've got Guinness, and out of all the 0% drinks, you drink zero, right?
You know what? I don't even. If I go out, I drink a Coke Zero. I'm a bit crazy like that, or a lime soda.
It is true. I have checked this. He is a man after my own heart, because it means I said, Ronnie, this means that I can then drink.
Exactly.
And
More
you
for
can
you.
drive me home.
More for you.
And you know, we know strong men love Coca-Cola.
Yeah,
It's like, you know,
that's me and Trump.
Trump. Have you heard about his straw?
I've heard about his
straw.
Coca-Cola button, but not his straw.
Coca-Cola button. He does have a Coca-Cola button, and he's been spotted many times drinking Coca-Cola in the White House. Before we get to that, let's have a look at Deckers as well. 1-4, Ronnie, on fast markets. Let's have a look at Deckers.
Yes, my man David Boyce.
Boise boys.
Correct me if I'm wrong. But yes, so I have looked into Deckers, and I think it's a very, very interesting stock. So what I did was, the only thing I don't know the other two brands in the Deckers portfolio except for Hookah and Uggs. But what I did was I logged on to the Tip Ranks portfolio, and what I saw, it was a very positive momentum on it, with a price target at 225. It's definitely a lot of room for upwards mobility. We've seen that blogger sentiment is bullish. Hedge funds have bought 716,000 shares in the last quarter. Crowd wisdom is very positive, and momentum is on its side. And they produced a 39% return on equity. So therefore, I think that Deckers is a very, very interesting company. And if we look at what Martin Price said, we want to find companies that raise and beat, and they're raising now. So they're showing a good momentum in the stock. So Deckers, thumbs up from me.
Any of you, any more comments on Deckers, do slam them in the comments page here. You know, Deckers Outdoor, of course, saying its annual net sales forecast for a second time rising. They're raising its net sales forecast for a second time. This is after beating its Q3 sales estimates. Don't know about you, I've never tried, you know, the Hoka shoes. Have you tried any of those?
I'm actually wearing them right now.
Oh, how is it? You rate them?
Yes. I'm actually gonna buy a new pair for the spring coming up. So I am a big Hoka fan.
Yeah.
But we have Carlo Ancelotti asking us in the chat, what do we think of BT?
BT is one that I have not traded in a while. Let me just try and get my screen up for you. What do you think of BT?
BT, I think it's... what I like about BT is the fact that... So I'm not, as you guys know, I'm not the biggest fan of these old school sectors of public, telecommunications. But what I like about BT is that they have they have a brand of portfolios with the EE plus net, and they're selling off some assets. So they sold the BT Tower for 350 million to turn it into a hotel. And they also had the 25% ownership from Metal, who came in and had a 2-day meeting with the board about how they're moving forward. So I do think there's good opportunity for a turnaround in BT. So I do like BT more than I like Vodafone. No shots fired at anyone else, but Signore Carlo Ancelotti, BT is a positive one for me.
You are on fire, Ronnie. You're on fire. BT also in the headlines recently because it's had quite a bit of restructuring there, and it seems to, the new strategy seems to be working so far.
Yeah, they're focusing the resources. They got a new ownership in. They've gotten rid of the sort of debt burden heavy Atal, the French Israeli owner. So for me, if BT can get the restructuring right, it's a positive stock for me.
Now, let's also have a look at Barrett Redrow, because the UK Housebuilders is one that I keep a close eye on. Barrett Redrow up 6.7% earlier. I did have a giggle when Rich said earlier that, since you started talking about it, it lost some of its gains there. But, still up a decent amount given the sector has been so beaten down. Do you think it's time to get back into these beaten down house builders, Ronnie?
Yeah, if we look at the momentum, it's there. All the house builders are beating on completed houses. So I think if that's something, we've seen a clear pattern of them building more and delivering more than expected. So it shows that the market is moving more towards that, and there's a big need for the build to rent in particular. We saw Granger talking about it, so I am quite positive on the house builders.
Just taking
with rates coming down as well, it's a perfect example of that.
Yeah, exactly. So I was just going to say that the thing that will boost these house builders, I'm showing you my watch list there of the sector and related stocks there. I've added Kingfisher and Travis Perkins in as well because they are, related. Persimmon, the most rate sensitive one there. So I do have a long on Persimmon because I'm hoping, like Ronnie was saying, that it's now time for the house builders to start pivoting and start rising their shares. The CEO of Barrett, David Thomas, also saying that economic, political and lending environments have stabilized and there's been some recovery in customer demand. If you're seeing any recovery in customer demand and where you live, please put it here in the chat. Just calling out a fellow trader friend who messaged on the chat, whom I hear, Philip Robertson. You go way back with Richie Rich there. It says, Rich and my wife Stacey and I are just back from Cape Town. No, you don't cover this, but is it a sensible move to take advantage of the exchange rate and buy property there for retirement? Phil, I believe Rich mentioned you were from Inverness.
Yes, the good old Inverness. Shout out to the Loch Ness.
I take it you've been there to try and spot that.
I have been in Inverness. It's a lovely city. Mr. Robertson, my colleagues in the South African office, they highly recommend Cape Town. They think it's a beautiful place and a lovely place to stay in. If you want to take advantage of the rates and if you want to hedge your currency exposure until you make that final purchase using derivatives, please give us a call and we'll be happy to set you up with a currency hedge.
They're extremely good at their currencies. Extra service by the Ronnie here.
Yes, sir.
Right. We have 90 seconds to go. We have Away from the Numbers. Morning to you, Away from the Numbers. Any thoughts on tallow oil? Tallow oil here, just whacking up the chart for you, has been, it's been, on a downward trajectory. However, we do have the OPEC monthly report later on today. Many of the oil majors also have seen, especially BP, thanks to Elliott.
Yeah.
A bit of a rise.
I'm very bullish on BP. I have to admit, I am riding that Elliott wave. I think once we see the company or Elliott presenting their restructuring plans and their turnaround plans, I think there's going to be a strong momentum for the stock. So I am very bullish on that, and I am riding that wave.
Nice. The Ange is going the opposite direction to the Ronnie move, because I am looking at this and thinking it's gone far enough, and all those people who are bag holders here on the BP front are going to now try and offload the shares before early March, which is when the next load of shares for employees there vest. And so I kind of think that in the short term, it is bearish for BP. Yeah, and also the update on the strategy there. Well, how much time have we got? We have none.
None.
Before they take the crook out, Ronnie, it's been such a pleasure.
Thank you for having me, Ange.
And I will bring you a Coke Zero.
Yeah, thank you.
Later on. I'll see you right there. Stay where you are, trader friends.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Hey, trader friends, welcome back. And we have Isar.
Hello.
Hello. We had such a great session the last time, talking about, trading stress, especially after the last 3
Yeah, I mean, we had
Mondays.
a series of volatile weeks. So we spoke last time about how you can kind of think about stress in a positive way and how stress can enhance performance. Yeah.
And this really resonated with all our viewers. A lot of
Yeah, I saw a lot of questions about it. We
Yeah.
shared the resources a couple of times. Yeah.
Exactly, and then our SACs asking and loads of people saying, can you share the Stanford site again, which I actually did
Yeah, yeah,
after
yeah.
the show.
Yeah, you said you used it, right?
I used it. It's really, really handy. And also it comes in really short excerpts and they have questions to ask you. So it's actually really helpful, not just for trading, but for everything else too. But I guess the thing now is, because there was so much engagement, we also want to talk about, desk setups and some of the practicalities.
So I think this was, so thinking about performance, it's not just your mindset, it's also your physical setup. I was actually kind of inspired by when James came on and showed his what his desk looked like at home. He showed his broken keyboard.
I'm trying to put that up for us
Yeah.
now. My laptop, my system is finally playing ball here. Here we are.
Yeah, you can see the setup at home. I think this is actually a pretty common, typical setup. Maybe it has one or two more screens than most people have at their homes, but maybe not. And I think, so I think I wanted to think about how does your physical environment impact your performance? And in particular, are there any things you can do to do with that physical setup or to do with your work routine to try and build that high performance into the way that you think and the way that you operate?
And it's fascinating. What drew me to this picture was the fact that he had the dream picture of his dream boat on the top left-hand corner.
Yeah, the vision board.
The vision board. He also had post-it notes. I have a lot of post-it notes.
Yeah.
And it drives my husband insane that I have a wall on my left.
Oh, you can see the post-it notes at the top.
Yeah, here you go.
Yeah.
And I said, what does that one say? Because my eyesight's not too good. He was like, it kind of says, kill yourself. And I went, what? He went, it was a reminder, kill yourself if you try and buy before the reaction.
This is like a reminder, like a mantra.
Yeah, which I thought was fantastic.
That's
because
funny.
I have something similar in my trading journal.
Yeah.
And it's kind of like, kill yourself if you try and scalp 2 instruments on one laptop, because that did not end well for me, I have to say. What are some other key tips?
Yeah, so I think there's a few different things you want to think about. I think number one is having, especially if you work or trade in the same place that you sleep, I think it's important to think about physical space. And so where possible, there's a lot of evidence that shows that separating the physical space you have for trading from the physical space you have for leisure or for sleep is actually really good to keep the kind of mental model you have separate between those two things. And actually that's really critical to being able to switch off when you're done with work or done with trading. And I think that's important because it helps you recharge more effectively for the next day. But it's also important to get you kind of locked into the headspace for when you do need to kind of turn it on. So there's some really interesting research about it actually. A lot of it comes from astronauts in space.
Well, that makes sense because high stress, right?
It's high stress.
you're
The
not
ISS,
alone?
there's not very much space on the
Yes.
ISS, and you're not quite alone. There's like typically between 3 and 7 of them up there at a time, but it's not a lot of space for a decent number of people. And they do work in the same space that they sleep in. And so they developed all these techniques to do with what's called like zoning, where you either have spaces that are dedicated for specific activities, or you have what's called reorientation, which is where if you're using the same space for both things, it has a physically different layout and setup to when it's in kind of work mode versus when it's in sleep mode. So even the equivalent of this at home is like having your chair in one place when it's like leisure mode and having your chair in another place when it's in kind of work mode. And that's more of a physical indication to your body and to your eyes and to your brain to think, okay, we are now in a mode where we need to be focused and locked in relative to like leisure time where it's a bit more relaxed and chill. So even if you're using the same space, reorienting it for different modes is really important.
Fantastic. What would you recommend for someone like me who I have a really addictive personality, right?
Yeah.
So I almost have difficulty letting go.
Yeah.
I have difficulties.
Letting go about what kind of
So let's say if I am trading the Nasdaq and it's going great.
Yeah.
And everything's going the way it's been like 15 minutes of it going the way that I expected it to go. So I'm scalping, I'm going great, everything's working. But I know it's going to turn against me. But I can't seem to tear myself away. And I think we've talked about this before.
Yeah.
If I get burnt because I don't get away from it early enough, I have that almost like that feeling of, darn, and I can't get
Like
rid
the
of it.
FOMO, right?
Yeah, the FOMO, the FOMO.
Yeah. I think that's a very common reaction. I think there's a few things to think about. One is around trying to have where there are clear rules and risk tolerances that you have, being strict about applying those, even when you're winning. So like I used to play a lot of poker, and one of the things that I would always kind of keep in mind is like, okay, if I am playing over a certain size, like let's say I'm going to give you a very simple example. If I'm playing 1-2 poker, where the blinds are £1, £2, typical buy-in for that is somewhere between £200, which is 100 big blinds, or like £400. So if I buy in for £200 and I run that all the way up to, let's say 1.2k, then that's quite a lot of money that is at risk that's sitting in front of me, and having the right amount of discipline to work out, okay, now we have hit what our target threshold is, we're just going to cash out for that period of time. And maybe if I do want to keep playing, instead of going to like continue playing the same stack with the same money at risk, I might go to a casino down the road and rebuy in for another £200. And so then the maximum I can lose is £200. So having a clear understanding of risk tolerance is really important. That actually is generally frowned upon in poker. It's called rat holing.
Oh, I didn't know they had a name for that.
They have a name for everything, but yeah, it's called rat holing because you're basically taking money out of the game and like they think you're a rat for doing that. But it's a really important risk management strategy, and you just have to make sure you don't do it all the time because then it annoys other players. But it is really, really important, and it allows you to keep that focus. And if you do continue playing, actually you're playing with a much more reasonable stack rather than a stack that you just happen to have run up. And so I think I think understanding what are the criteria and risk tolerances you want to have and applying those with discipline is really important. The second thing is that's really interesting is there's some evidence that shows that if you are playing well in poker, you actually keep making better decisions than if you're playing badly and you're a bit more emotional and you have a heightened emotional state. And the same is actually true of trading, right? So like actually sometimes when things are going your way, that's not entirely like coincidence or random. It's because you're making good decisions, and when you make good decisions, you can kind of continue making those decisions more easily. That being said, you've got to, again, like I said, think about those risk tolerances. So would I peel you away from the laptop when you're on a streak where you're making great decisions and you're winning? Probably not, actually.
Really?
Like, I think if you're
I'm in a more calm state.
if you're in a flow state where you're calm, you're making sensible decisions, you're not making stupid risks, and you're within whatever you consider to be reasonable risk bands, like I wouldn't be pulling you away, at least not from a pure performance optimization side, because good decisions tend to actually lead to other good decisions and bad decisions tend to lead to other bad decisions. So it depends a little bit on the emotional state you're in and how you're thinking about performance.
Right, and on that note, rat holing people, I learned a new term today.
Yeah.
On that note, because I feel optimized now speaking to Issa and I feel very calm, I am going to do some rat holing whilst you're on.
You're gonna do a live rat.
Because, look, I'm going to go because I know now it's slightly turning against me, but I have been waiting to close these. So I'm
A gold position.
Yeah, I'm going to close all of them and
Gold-
take it off.
Gold is like one of my biggest regrets
For
from the last couple of
now.
months. I wanted to open a gold position in October, and I ended up kind of not doing it at the time because it had run up, and then I have missed out significantly on an extremely strong period.
Well, it's the whole kind of like uncertainty of Trump, and also the fact that you know if he has delivered.
Yeah.
Right? But now it's kind of like I'm waiting for the next tranche, and hearing you speak earlier, it's kind of better to rat hole.
Sometimes it's always better
rat
to
hole?
It's always better to rat hole than it is to lose money. But rat holing in general, in poker terms, is seen as unfavorable. But I actually think in trading terms, it's probably an optimal thing to do.
I need to find out where it came from. Like,
Yeah, I'm not sure actually. It's one of those terms that people just use. Like, I don't know, poker has a lot of these like really random terms.
they do.
So I know the origin of the word tilt. Do you know what it means to be tilted?
No.
So you're tilted when you're in a heightened emotional state and you're making bad decisions, often because you've lost money. So
Right.
being tilted, so understanding when you're tilted is really important to being an optimal poker player, and then trying to avoid being too tilted too often is also really key. And so managing your emotions and understanding when you are in that bad state to make
Yes.
decisions is like critical.
Yeah.
But the word tilted comes from pinball machines, because in the olden days, people used to fire off pinballs, and if you were trying to cheat, you would
Yes.
tilt the machine, and then it would basically give you a massive error code where it says tilt, tilt, tilt,
Right.
and it cancels your score to stop you from cheating.
Ah.
And so people who were really annoyed would bang the machines,
Yes.
and then the machines would think that that was them trying to tilt the machines, and it would give them the tilt error score when stuff goes wrong. And so
Right.
that then came to mean, it's used in gaming a lot as well, actually. Like being tilted is when you're in that kind of state of frustration and emotion.
Yes, and I've seen people banging and tilting the machines.
Yeah, or snapping keyboards.
Yeah. Or snapping keyboards like James Gordon. Monkey Man saying they used to say about changing clothes when you get home from work.
Yeah.
Not so much these days, he says, with casual dress and work from
That's actually a really big thing. So that speaks to the other thing I actually was going to bring up, which is about transition moments. So one of the pieces of evidence that's really clear is if you want to be in a really effective headspace when you go into like work or trading in a specific mode of operating, and when you want to come out of that specific mode of operating, it helps to have transition periods and transition activities. And so the classic one that we used to do a lot was commuting, where you would have this like 30-minute to 1 hour period of your day, which is a transition state between home life and work life. And there's some strong evidence that actually that transition state helps you be more optimal when you get to the target like mental state that you want to get to. And so nowadays, if you're trading at home, it's actually important to create those transition moments for yourself. Even weird things like going for a walk around your building and then coming back in can be really helpful to build that routine and build that kind of artificial but still important transition mode.
That's a really key point. I didn't think about changing clothes. Thank you very much, Monkey Man. Boyce, we now know that your name rhymes with voice. Do you have a transition? Because we have Boise Boyce, and he's just clarified. We talk about transition, 90 seconds ago. I'm just going to show a quick reminder of what happens or what can happen.
This really made me laugh.
I was kind of looking at Gordy, as I call him fondly. This is a side of you that I've never seen before.
But this shows you how like being tilted can impact everyone and feels at the moment so frustrating. Like there's nothing in the world that compares to that experience of you either like making a wrong call or worse still making a right call at the wrong time. That's the one that drives me totally nuts. And like it really impacts people's behavior. Like that is not someone like James is normally an extremely calm, stable, rational person.
Yes.
That's not someone acting in a rational state, right?
No. And also I found out the story behind this. It wasn't even as if he had the wrong call. It was the right call, but the keyboard.
Yeah.
lost connection. So it was a wireless keyboard.
Oh, that's so tilting. That I can just imagine that is so tilting, especially if it's the exact right time to execute. Yeah.
And he still has it. He still has it at home. Jugger says, does fetching coffee in the kitchen before trading count as transitioning? Well, it works.
Yeah, I mean, anything that is routine and that is a thing that you don't do that often outside of like that particular transition moment can be a really effective way of building a kind of transition routine.
Yeah. And I'm just going to quickly show you just one last thing of how I transition. I have a Campbell at home, which Andrew McKilvey knows about. And so when I'm transitioning from like my mental headspace to even like in between financial
just play a few keys.
I have a big bash on it and I play a song that I know very well. And then it clears my mind.
Yeah, it's nice. And I think there's an element of this which is about also building routine. And actually, it's really interesting if you look at high performance athletes, lots of them have very specific routines. And that is to do with them getting into the right headspace, and it's to do with them trusting the process. A lot of sports psychology is really not about getting people to behave differently. It's about getting them to trust the process they're using.
And there you have it. Thank you so much, Issa. Learn so much when you come on. And everyone, tell us what your processes are. Whack it here. We'll see you next when Aaron Bright joins us.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, this is my favorite part of the entire show, and as well as my favorite part of the IG platform, the All Sessions with Aaron Bright.
Hello.
Hi, how are you?
Very well, how are you?
I'm very good indeed. Lovely to have you here. 1 minute to All Sessions, but you know, JP, dull.
Very dull, yes. Yes, it's been more of the same for past year, I'd say.
data. Well, actually longer than that. I mean, he's been data dependent for probably since the end of 2022, I'd say. So that's 2.5 years, I'd say. So it's been more of the same.
Wait and see, wait and see.
Don't expect too much this year. Markets have already had a little jitter, I think, towards the end of throughout last year about rate cuts not being sort of en masse. You know, we're expecting only a couple more this year. So he hasn't sort of said, oh, expect 20 rate cuts this year or expect none. He's just kept the rhetoric the same. So that's why the markets were very muted yesterday.
They were very muted. In fact, I was surprised to kind of see that, you know, of course, the whole before the CPI still in place, but we didn't see more of, you know, sort of trickling out of comments from Trump after JP. I thought he was going to dig it in, right? All sessions now out of the gate. Let's do that first. Alcoa is up just a touch, but let's have Aaron take us through the leaders board there.
Got Super Micro up 6% and 0.3%. Plug Power, a bit of a tongue twister there. Just up 2.5%. Gilead up 3.5%. AMC 2.75%, and Neo up just shy of 2% there.
We also have, let's have a look, lots of big names on the losers board there. We've got Lyft down 10%. This is Uber's closest competitor. Aaron, take us through some of the others.
JD down just shy of 2%. ASML down just over 0.5%. Tesla down 1%. And Virgin Galactic is flat.
Yeah, and Tesla down more than 1%. In a time, just going to bring that up for you people and whack that up. Come again, producer Fred? Yeah, and so they were down, as Fred rightly said, a lot yesterday, some 6%. Let me have a look at that for you. Yeah, more than 6%. And it's continuing to add to
I wonder
those
if
losses.
this has got anything to do with the Sam Altman, Elon Musk feud over the purchasing of OpenAI.
OpenAI,
yes.
yeah.
Because I think obviously Tesla is a proxy of Elon Musk, so...
apparently it goes way back, right? This rift between the two.
Yeah.
For those of you who are not across the story, Elon Musk and wanting to get his hands on OpenAI, Sam Altman said, you know, oh, my dead body, basically.
There was a rather fruity exchange between the pair on the X platform.
I haven't seen it actually. Is it really fruity? Is it really?
Well, Elon Musk called him a swindler. So, yes, quite typical of Elon Musk to make some interesting comments.
Yeah. Speaking of which, his BFF, President Trump, making those comments to do with the shark as well. Have you seen that one?
I haven't actually.
I'm going to show you some pictures, trader friends, if you're not across the story, because the shark Trump, let's see if you can get this up here. Here are some images.
Is this sharks in the Gulf of America? Because it's now on Google Maps showing Gulf of America.
Is it?
Yes.
But also the fact that this story links to the fact that Trump is overturning the ban on straws, on plastic straws. And the effect, the net effect is like all these memes and everything, because he said it won't affect a shark, they'll just chew or chomp through it, I think is what he said, or what was suggested.
They do have rather big teeth, so...
Yes, so now you can suddenly buy, it's okay to buy plastic straws again. And of course his favorite drink is...
Diet Coke.
Diet Coke, there you go. Yeah, so on that note, let's go live from the trade desk. So just wanted to go through some of the all sessions again for you, because there are some that are moving rapidly. Coca-Cola, we spoke about that earlier, down 0.5% or more than 0.5% there, especially after Coca-Cola mentioned that I believe it was sales outlook weirdly was not so great, but it was also the fact that Pepsi, its closest competitor, also highlighted a cloudy outlook. Do you drink either?
I am a Diet Coke drinker. Yes.
Is it for the taste or is it
It is. I find Coca-Cola a bit too sweet, regular Coke.
Yeah.
And but I like Coke Zero actually. So it's Coke Zero or Diet Coke, yeah.
Oh, I'm an original kind of gal. Yeah, I just like the.
I find it just if you sort of grit your teeth after, it feels a bit. I don't know. Maybe it's just me being brainwashed by people saying Coke's terrible for you. And I do actually like Pepsi. You know, I think you don't like it.
No.
I think the taste is quite nice.
Rank. Actually. Oof. And then the worst is cherry
yes.
Coke thing, which almost killed me when I was in the States. But Coca-Cola actually did come out with good earnings. They said, you know, strong volume growth was strong, global volume was strong, net revenues up 3% on the year, worldwide operations, you know, thriving, but, you know, it has come back down because of this outlook issue. Pepsi also same thing there. Affirm Holdings, RSAX, down again. As I mentioned to you, this is a very volatile stock. Trying to get that up for you. Affirm in the buy now, pay later camp. Same as the likes of Klarna. It didn't have a 1, 2, 3, 4, 5. Quite a string of up days there, but it is down 1% there. As I mentioned, this is a very volatile stock, so if you do trade this, make sure you have your stops and limits in place, strict ones, because, you know, it's one of those stocks that can move just on a sixpence, or if one of their CEOs or competitor CEOs comes out with a statement.
Yeah, absolutely.
Any of the others that, did you notice overnight that we had numbers from Row Motion? Those of you that watch the EV space, Row Motion saying global EV sales up 18% in January.
Impressive, and it's, I think, an interesting space to watch because Trump has obviously in his first week or so in office has said, drive whatever you want. I'm getting rid of this EV enforced new car policy post, I think it was 2030 or 2035. So obviously a natural headwind for the EV space. So quite an interesting area to watch going forward to see which areas of the automotive industry continue to perform and potentially underperform going forward.
NIO all session stock as well up more than 2%. Let's have a check on. Hold on, there we are. Sorry, Terence. Here we are. NIO up more than 2% there. It is beaten down though, and this is one that Tom Sosnoff and the gang there, they like taking contrarian views, and so they have, when they were here last year, he did take a view that NIO was so beaten up that it's time for it to start reversing and heading up. And let's take a look at Rivian as well to see whether there's been, Rivian also up 48 basis points. For those of you not across the story that came overnight, and figures from Row Motion showing that global EV sales up 18% in January. Let's go through some of the morning's news because we've had quite a big movers with Aaron here. Barrett Redrow is up 7.8% now, or thereabouts. Are you keen on the UK house builders? I mean, Barrett Redrow was upbeat on annual earnings, but it's you know, this share buyback, I think, is more of what's been lifting the stock.
Well, we know that the new government are planning to build, I think it's over 150,000 homes a month to meet their target. So naturally, you know, house builders and building stocks are likely to be beneficiaries of this. Whether they can achieve that is yet to be seen. And also important to note that the economic outlook for the UK is certainly not the most positive. Obviously, you can counter that by the fact that rates are likely to come down. So I think there's a little bit of a tug of war between the sentiment for house builders at the moment. So it's going to be a really interesting area to watch.
Also, this year, talking about buybacks, yeah, the screen's suddenly gone dark, but, you know, have the camera on myself and Aaron. 2025 seen as the year of buybacks. And we've had indeed quite a few this morning. and also earlier this year too. Strong European buybacks to continue in 2025. Is this something that you factor in when adjusting your smart portfolios?
Not too much. We don't factor in sort of stock by stock levels, stock by stock. When we're doing our portfolio construction, we look at things on a more macro level. Obviously, buybacks are beneficial to an extent.
I think I fixed it. Not just a pretty face, people. Here we are. Let me get that. Go on then. Strong buybacks.
So the thing with buybacks is obviously, it's a sign that the companies believe that their stock is undervalued. So obviously that's a positive sign. And it's certainly an interesting space to be looking at, to see this strong buyback sentiment from Europe.
Yeah, and Andrew McKilvey and all those of you watching the space and looking at companies that are expected to announce buybacks. I was tickled when someone on our chat this morning said they should make buybacks illegal because, what would Rich do with Vodafone then? Nearly 75% of buyback programs set for this year are yet to be executed.
It's a huge amount.
Yeah. And in case you're wondering what I'm waving about, it's a dongle. And I think this was what was causing the issue with the screen. I've now made it direct into the laptop. Let's have a look at Heineken as well. We talk about this quite a bit here. Heineken, one of those that is on the, let me get my screen back onto the right page. Heineken was up 9% earlier. Let's have a look to see whether there is more fizz in the stock. Yes, there is. Have a look at that.
Very impressive.
Up almost 12% now. Do you remember the Heineken ads in the 80s, which really put me off drinking Heineken like pretty much forever?
I can't say I was alive in the 80s, Ange, sorry.
Such a young soul. Oh my goodness me. Heineken they basically draped, and I hope Ronnie's listening to this, they draped a Danish, blonde, blue-eyed woman in a Heineken green swimming costume, pretty much on everything.
Wow.
Yeah, and kind of alluded to the fizz of the beer, but never really showed the beer until the end. And so, she could be getting into a car, or she could be walking by the beach, with the wind blowing and everything. And the tagline at the end was, ooh, Heineken, it's the beer for you. See, yeah, and that's why I can never drink Heineken, because...
I quite like it, it's nice. I quite like Heineken.
I've been told by Mike Taylor that the zero is, I should try it.
Yeah, and there's a growing market for non-alcoholic beer. We've seen, there was an advert a few years ago with Heineken where I think it was Max Verstappen, F1 driver, drinking the zero and then driving, and then I think he might have been pulled over, and then he's like, oh no, it's just the zero beer. So definitely a growing market, and I think they were one of the first companies to produce zero beer, and now obviously you've got a broadening out market, but yeah, definitely a popular 0%.
I must look up, I haven't seen that ad, neither has Terence. What I have a bugbear is that even if you buy 0%, and I'm going to pull up my watch list here as I say this with disgust. Even if you buy 0% beer, this is all sessions. Where are you, brewers? Come on, I wish this could be, maybe I'll tell the DevOps team to make this alphabetical. Here we are, brewers. Is that even if you buy 0% beer in Sainsbury's, Waitrose here, because the algorithms haven't been set to know whether it's zero or not.
Oh, you still need to be ID'd.
Yeah, you still need to be ID'd. Yeah. And you're kind of there going, a ripe banana has more alcohol than this 0%.
Or, some chocolate liqueurs with a little bit of alcohol, or tiramisu or something, yeah.
Boys, your voice asking for Zeiss Meditech, they're down 7% this morning. I have to admit, not one that I actually trade. Please enlighten us. Have you heard of this Meditech?
Can't say I have.
Right.
Not a stock I follow.
Down 6.5% there. Let's have a look at the news Carl Zeiss slides almost 7% after Q1 EBITDA undershoots expectations. No further details on the outlook as well, which is always read as a negative.
Definitely.
Stock at the bottom of the German mid-caps index.
Wonder if it will be demoted out of it eventually.
Yeah, but let's have a look to see whether I can bring that up on my viewer page here. Do you like biotech in general, Aaron?
Yeah, I mean, look, it's always an interesting area. You know, across our portfolios, we don't tend to allocate in a way which is super thematic. We tend to look at things on a more geographical level when we look at equities. So, you know, we have exposure to biotech across US, European, and to an extent some of our smaller cap holdings as well. But we don't specifically allocate to that area. We keep a much more broader sort of asset allocation specific and focused view when we invest.
Right. So Carl Zeiss Meditech, one of the world's leading medical technology firms, and it's got strategic business units in microsurgery and wants to leave a lasting mark in ophthalmology. That's eyes, isn't it? I should look into this, boys, because I'm in extreme need of new eyes, because not only do I have astigmatism, but I am perhaps...
Me too, by the way.
Oh, you do?
It's on my left eye, but I don't really...
So does Fred as well.
Really? I don't really wear my glasses, though, so I don't really need them, because my right eye's fine, so it compensates.
Well, I'm like -8 as well, and the optician keeps saying that my astigmatism's not bad enough. But bright lights, especially in if it's behind you and I'm looking at you, or a screen and something's
goes blurry, doesn't it?
It does, and I get glare. But you know, Terence and Cam and Fred have done a great job with this studio, I have to say, and also Richard Rich getting these screens positioned elsewhere. Speaking of biotech, Tempus AI. I was looking at that last night because that is one of Nancy Pelosi's picks. And let's just show you, we have quite a few trader friends who have been asking about this as well. Tempus AI. There we are. Add to workspace. Tempus AI has had a meteoric rise, and just trying to zoom out a bit so you can see what I mean there. But if you bought that in, you know, January, from the lows of, you know, around 3,200, it's now at that 7,100 level.
If only.
Hindsight's a great thing.
I always do that when I look at stock. Yeah.
Any of you trader friends following Nancy Pelosi's, stock picks, let us know whether you've also got a holding in Tempus AI. Let's have a look at the broader indices. Now, of course, we're waiting on that CPI number. What's your gut feel?
Interesting. I think it's likely to come in line with expectations, but I think that we're expecting a figure just shy. It's around 2.8, 2.9%, I think was the last expectation I saw. I mean, it's not a figure which is the most comfortable, I would say. I'm always, as an economics graduate, I'm always looking at a figure of around 2%, 1 to 2%. So it's not a figure which fills me with tremendous amount of confidence in terms of the price level of the US economy, but it's much better than what we've seen over the past couple of years. So that fills me with a lot more confidence.
A chink of light.
Definitely, definitely. And I think it's going to be interesting to see where the more sticky areas of inflation are. And particularly when I look at the UK, we've seen service inflation be quite the main component. And that hasn't moved down a substantial amount. So interesting to see. And then that's obviously going to determine our rate path going forward in the United States.
Yeah, that's right. And as Aaron said, it'll be the really sticky stuff we're watching out for. That's why I'm looking at the core CPI, which is expected to ease to 3.1% from 3.2% in December. On that note, we have to go, but stay right there. Rich is coming up next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place.
Welcome back, everybody, to Market Measures with myself and Elliot Harris, the volatility master at IG. How are we doing, Elliot?
Very kind, Richard. Good morning.
Now, Elliot's joining us from home today, so everybody wants to know, where is Rosie?
She's outside doing the gardening.
Good stuff. Right. Well, we've got a special treat today. So we're going to be looking at an introduction to implied volatility with our head of volatility. So let's look through that. After this, we're going to look at a Footsie upside trade, a Dax downside trade, and even a 0-day S&P trade for today's CPI. So let's first of all learn what IV is, and then we can start to look at expected moves for the day. So implied volatility represents market expectations of future price fluctuations. Those are calculated from the option prices and expressed as annualized percentage. Often called the fear index, IV serves as a gauge of market sentiment, spiking during periods of increased uncertainty and investor anxiety. Traders rely on IV for strategy selection, optimal entry and exit points, and risk management by understanding the potential price movement ranges and market conditions. Elliott, mean reversion is our philosophy behind how implied volatility moves over time. Because price is generally not mean reverting and IV is mean reverting, we've got a better chance of being right on direction of implied vol than the direction of the price of the underlying. Now, let's compare the S&P 500 versus the VIX with the IV of the S&P 500. So there you go. That's very simple demonstration to what we're talking about. Guessing the price of a stock or an index versus pretty much having a very good idea where vol's going to be, then that graph shows you. But Elliot, sometimes it can really come to bite you in the rear end, can it? Because vol can be a move against you pretty quickly.
Vol can be a very harsh mistress, yes. If you just bring that chart up again, should we just explain where the green spikes are? So there isn't any calendar, but I'm guessing the first one on the left has got to be March 20, COVID. VIX hit lifetime highs of around 82, 83.
Yep.
The likes that we will never, ever see again. You can quote me on that. I don't know what that one there is. We didn't get there again. So I'm querying exactly where this was.
So I think
that's August.
This is probably actually longer term. So that's the financial crisis. That one is exactly as you say, COVID. And then this will be August the 5th here.
And August the 5th, exactly. Okay, got you. Yeah. So August the 5th felt at the time like a real significant move.
Yeah.
Because it was almost like that was a faster move than COVID. COVID was over the course of a few days, whereas that August the 5th was just a huge explosion, if you like. But if you're looking actually the quantity of the move, we didn't even get to half the levels that we saw in 2020.
Wow.
Yeah, so VIX does explode very, very, very fast. So, and just picking up just on the previous slide, the VIX is known as the fear index.
Yeah.
Yeah. So just for all the readers at home to be clear.
Exactly. Good one to make sure. Now, IV rank is this part of proprietary calculation made by Tasty, and it wants to give you an idea of how an index or a stock is trading vol-wise relative to its own history. So IV rank's calculated as the current IV minus the 1 year low over the 1 year IV high minus the 1 year low. Right, so that's how they get it. So the IV rank is a representation of how current vol looks to historic vol of the previous year.
Yep.
When IVR is higher, the odds are more than 50% that IV will decline in the following 45 days. So the percentage, this is a spider 45 days to expiry. When the IVR is over 20, you got a 66% chance that it declines. Moving up to an IV rank above 50, you got a 74% that IV declines throughout the trade. Now, what about that potential for volatility overstatement? Well, it can be as high as 91%. But Elliot and I are going to go through in a second, what do we mean by expected move and the implied move against the actual? Because Elliot's got a great stat for us about recent S&P 500 realized vol versus implied vol. So that's the end of the mathematical part. Now we go to the master explaining it.
Yeah, so just to kind of explain to people at home exactly why we're so concerned about where vol is and the market's future expectations of vol. It's all to do with timing. So if I could say, take everyone back to COVID, we didn't really feel the pinch until March 20. I'm very much a firm believer that COVID was very much a thing in probably as early as December 2019. The Western world was quite blasé and kind of felt that, okay, it's over in Asia, it's their problem, it's not going to affect us, life carries on.
Yeah.
More and more cases started to be reported, but there was no official recognition. Once it landed on US shores and into Europe, it was very different. It became our problem and everything just absolutely collapsed. So there were people that were ahead of the curve on that. So if you were buying put options during, say, January and February, when we started to come off slowly, but not anything like as aggressive as we did in March, you made a lot of money. So it's all to do with timing. Similarly, if you stepped in and started to, say, sell options when that VIX was up at 82, 84, the market bounced back fairly quickly. We probably had a week or two maybe of real nasty pain of, say, consecutive 2, 3, 4% moves down. But if you started to sell options then, you are selling a vol that we will never see the likes again. So very quickly, by say come April, May, obviously later in the year, we found the vaccine. After that, vol absolutely collapsed. So it's all to do with timing. Okay, so that's precisely why we really care about current IV and the future prediction of IV.
And let's just also explain the sort of perfect scenario where in January of 2020 you were seeing pretty low implied volatility.
Yep.
And the market was high at the time. So you buy a put, but Elliot, can you just describe to people how the value of that put will move as the market comes off and as vol is spiking multiple times on itself?
Sure. Yeah. So in terms of options, you can sell options, you can buy options. Here at IG, I would probably say maybe slightly more clients sell options than buy options, which often comes as a slight surprise. But in terms of the buy side, again, it's all to do with timing. So you're buying, and I'm going to introduce the concept of delta, which I'm sure has been covered on the show many times. So I'm sure most of the watchers will be familiar with what I'm going to say about delta. But put very simply, for those that aren't familiar with this, you can think of delta as the probability of an option expiring with any value come the expiry date. Okay, so let's say that June 20, you're buying at the money options. You felt that, okay, I think that this looks good value in terms of a vol, but also markets are quite high. I think we're due quite a correction because what we have coming is pretty serious for the whole world, which we haven't ever really seen on a global scale.
Yeah.
The way that price of the option will actually change is there are various factors which go into the value of an option. It all follows a mathematical formula called the Black-Scholes, which again, I'm sure you've covered. Drivers of that are volatility. So if you can buy, say, and this will come on to what I will give as a trade shortly after. If you can buy a Footsie option when vol is at, say, 10%, if that then vol goes to 20%, you're going to make purely on the vol itself. Other drivers are where the underlying actually is trading. So in terms of a put option, as the market comes lower, the value of that put option naturally goes up. The extent to how much that price of the option changes is going to be driven by the vol and also the delta of the option. So if you're buying an at the money option, that's got a delta of 0.5. As the market comes off 10 ticks, price of that put is going to go up 5 ticks. But delta is obviously a continuously changing number. As you go through your strike, then the delta will tend towards 1. The lower it goes, the more you're going to make.
Fantastic. And so, yeah, there's those real opportunities that don't come along very often when you can buy an option that will not only, say, double in price because of the move in your direction, but it could double in price again because of the jump in vol. So you've got that real leveraged opportunity, and I don't mean that in terms of.
It's the beauty of buying options. Certainly, on to deep out of the money options. Okay, you might need to buy a ticket for a year, 2 years, but if you're buying deep out of the money options, you're not paying a great deal. You might be paying 5 or 6 ticks. If you can time that right and catch your lottery win, like I saw options that were bought at 3 and 4 that clients sold for over 1,000. So the leverage you were getting was incredible.
A 300 times return. That is incredible. So, okay, well, let's take this and look at the realized vol against the implied vol, as in what did something actually do versus what it was predicted to do. And you've spotted something interesting on the S&P recently, haven't you?
Yeah, I do a lot of work and also study and analysis on realized vol against IV. Generally, our realized vol will be under implied vol, which means that, okay, the market hasn't moved quite as much as perhaps the market expected it to, which is great for selling options. Mm-hmm. However, what I've seen over the last week or so is actually RV has been over IV. So realized vol has actually been over implied vol. It's largely been driven by any tariff news. Some of the tariffs have come as a surprise, but some stories haven't. So a lot of it's been well flagged, and still the S&P. I cover the US shift once a week, say, and I think I was on last Thursday, and S&P dumped about 40 or 50 points in about 60 seconds, and it was purely because there was a new tariff story, but
Of course.
it wasn't technically a new story. So market feels extremely jittery.
And how do we take advantage of that today? So CPI 130, the expected move on the S&P today is about I'm doing this in terms of the spider. So it's $4 on the spider, which is about 75 basis points. Is that right?
Yeah, if you can get up the end of day S&P options.
Okay, chart's up. Yeah, there we go.
Yeah, so get it for SPX.
Okay, got you. Right, let's go on to, here we go.
Here we go. Right, so currently trading 60.60, say. You're looking at just under 40 bids, say 39 bids. So I reckon that to be roughly 0.6%, which for CPI is relatively cheap.
You're getting that from adding, if you sold the 60.60 and you sold the call at the same level, that added together, that's about 38, 39 ticks.
Exactly. Yep.
So
so that's the implied move, which for CPI is relatively low.
Yeah.
I think back end of last year, this was closer to 1%. If I take you even further back, say a year to 15 months, probably talking about 1.5%. So as a CPI, it's not as highly anticipated as it has been.
Now, I normally am the biggest bear in the world and look towards the downside, right? But let's, for a change, because the expectations are already 0.3. So let's say they come in at 0.2 and inflation isn't as bad as you know, kind of other numbers might have inferred, and we see a jump. What is an interesting trade on the upside there? The expected move would have us move up to 6,100 on the S&P 500. I wonder if there's something interesting to do there.
Yeah, if we were to come in slightly under, the market's going to take that as, okay, is that now finally giving the Fed a chance to stop their tightening cycle, if you like? I'd probably maybe want to look slightly further than a 6,100.
Okay.
Maybe 6,110. It's going to cost you roughly 3 ticks.
Wow.
Yeah, that for me is roughly where I think we would be going. Just because of the skew as well, the risk is always going to be on the downside. So if you were looking at an option 50 points under where we currently are, so say the 6,010, that's going to cost you probably 1.5 times what you'd pay on the call. So for what essentially is, okay, personally, I do think we do come in line at 0.3.
Yeah.
But absolutely, if we do come in at 0.2, the market is going to jump. That's probably not the worst value there. I think that's 61.10.
Okay, Elliot, what about this? What about the buying the 60.96?
Yep.
And selling 3 of the 61.24s.
So 1 by 3, and it costs you roughly 3 ticks. Yeah, for 3 ticks, and you're buying quite a wide range there.
Yeah, it's like 30.
I think that's a lovely trade.
Go on, price that up for me, old boy. I'll come round to the desk in 2 minutes. But you've got a quick look at the the Footsie upside as well that you might think could be look interesting.
Yeah, so obviously European indices have been very strong year to date. Stocks in the Dax have been kind of the high flyers. Footsie's not far behind. Footsie's up roughly 7.5% year to date, so a couple of percent below the Dax and the stocks. However, Footsie Vol is nearing that key sub 10% level again. So let me just bring up my chart at home so I can just be, I think it's Yeah, so at the money, vol on Footsie is roughly 9.6%.
And what month would this be for? Sorry.
So that's for February. You'll pay
Feb.
slightly more in terms of vol on the March, but
Okay.
I would say have a look at the March. If you just bring up the March chain, it's because February we've only got 9 days, which doesn't feel enough. So March, yeah. So at the money, March vol is 10%. Okay, now.
Sorry, what have I done?
Europe
there?
is. Go options down the bottom. That's it. Footsie and March.
March. There we go. Okay.
So I was looking at something like the 9,000 calls. It's going to cost you roughly 27, 28 ticks.
Wow.
Now, Europe is obviously very concerned that tariffs are coming. Trump's been very open about that. So if tariffs do come, Footsie, for me, is fairly well shielded. So you're buying the cheapest vol.
Yeah.
And if you're relatively well shielded, I don't think Footsie's too affected. So if we continue to rally over the course of the next month or 6 weeks, it won't take a lot for us to get to the 9,000 mark.
Yeah, the way that it's
28
moving.
for that.
Yeah.
Yeah, exactly. 28 for that doesn't feel the worst value. And also we're going to obviously benefit from some extra dollar strength as well. That was a nice trade, I thought.
And you can sell.
Conversely,
sorry, I was going to say you can You can sell something like an 8,400 to do a risk reversal
on the put side.
On the put side.
Absolutely, yeah. And you're not paying a great deal for it.
Yeah.
It costs you 5 ticks.
Yeah.
I think it's a nice trade.
I like that.
Conversely, just to talk about the Dax very quickly.
Really quick, because they're already rushing me out of here.
Dax is on a tear up.
It is, isn't it?
It won't take a lot for us to reverse on the Dax. There are some key catalysts that are coming up. I was looking at the short-term vol, maybe 1 week, 2 weeks. So for this, possibly the February vol is probably low teens.
Wow.
Which for me didn't feel the worst value. So again, it's all to do with timing it right. If you can get in there just before Trump announces, right, this is the
German autos.
Tariffs.
Yeah.
Exactly. Dax is going to collapse. So it's all to do with timing. So probably worth having a look. Maybe this week might come too soon, but certainly the February going off next Friday.
Okay.
Worth a look, I think.
Yeah. Well, I've got the February 28th up here. Maybe 21,700s for 127. Selling the 21,000s, something like that.
Yeah, you could do that on a 1x3.
Okay.
You're buying a nice range.
Nice. Excellent. Elliot, thank you so much. Always a pleasure. And we'll chat offline about that 0 day for a better than expected CPI. We're going to go straight to talking trades to talking shop. This is the lads on the PCM desk, Luke, Pete and Ronnie, with their podcast. You're going to get the full thing here, 50 minutes. So go put a coffee on, settle back, enjoy Talking Shop, and we'll see you tomorrow.
Welcome back to another episode of Talking Shop with IG. I'm Luke, I'm your host for the day. And actually, if you're watching this on YouTube, you might notice we've changed things around a little bit. So we've now been given the keys to the TV studio. Rich, Ange, producer Fred have finally let us get access to the green screen. So now we're kind of sat in a bit more of a podcasty kind of place. And for those eagle-eyed amongst you, I'm not only joined by Sean, which is founder regulator. We're also the staple member. We're also joined by Ronnie Agnig. Welcome to the team of Talking Shop, Ronnie.
Thank you for having me, guys. Feel honored.
Well, we needed someone to replace Pete Ward because he's left us for the week, and I thought none better than bringing in a man like Ronnie. You've been ripping it up on IGTV, Trade Live with IG, so we thought we'd bring you in.
You know, I have been doing my best to get my exposure in, compete with these guys. Luke is not telling the full story. he did offer it to 2 people before me. Then, when those 2 people couldn't do it, I stepped in. But now I'm like Mario Götze 2016, ready to jump in.
This is it. This is it.
He's worried you're trying to steal his thunder.
Exactly.
Place of IG.
Can't outshine the master.
Don't let the beard fool you. He's still a baby. He's still a baby. But let's see. Ronnie's been with us now in the premium client team for
7 months?
Yeah, seven or 8 months, doing a fantastic job as one of our account executives. So welcome to the team. What are we talking about? Now, we're continuing our Tradecraft series, and we spoke last week about the maths. This week, we're trying to talk about the brain a bit more, okay? So this week's all about bias. What is bias? What does it mean? How can you use it to your benefit? How can you be aware of it to kind of so that it doesn't act against you? And we're gonna kick off with we'll kick off with a little definition, if that's all right. So the Corporate Finance Institute, the CFI, defined bias within finance, a predetermined disposition of one position over another. Usually, when the trader is biased, it can hinder proper decision making when trading because it can prevent a proper judgment. The trader may therefore end up acting on emotions rather than well-rooted analysis.
Sounds like me, yeah.
But do you think most people come to trading driven from a bias, i.e. been given a get-rich-quick scheme, or, oh, this is definitely going to happen? There's not the pre-plan that we spoke about in the previous episode. So I think most people are lured into trading from a bias perspective, and it's quite hard to then unwind that because, and again, certainly talking about the last episode, if it's successful, you'll continue doing it. Mm. And then it kind of reaffirms the bias. I think I'd go so far to say is a lot of people start from a bias perspective.
Bias or ambition, you've got to be really careful because, of course, everybody turns to trading as a way to make money. Luck in the early days can give you a type of bias that we're going to talk about, but there are loads of different types of biases. So we're going to focus on the 3 main ones. We're going to talk about confirmation bias. We're going to talk about gambler's fallacy. And we're going to talk about loss aversion, which in my mind is huge. Loss aversion for me is the biggest one. But there are loads of different other types. So hindsight bias, the ability to look at hindsight as 2020. You know, why didn't I take that trade? You know, I wish I would have done. Yeah. Availability bias, making a decision based on information that is readily available at the time. You know, everybody could look at the FT and then make a view. You can make that information available. An interesting one I saw that we're not going to dive in too much detail now is anchoring bias. So where the first piece of information you interact with is what gives you your bias. Mm-hmm. So I'm going to start with just asking you guys, you know, can you share a moment when you felt bias?
Ooh, I have a good one for this. So it was when I first started trading with a competitor, who I shall not name.
You're not allowed to trade with IG.
Exactly.
That's the reason, right?
But this was I was 18 or so, and I'd been trading on a demo account. And I thought I was like Axel Rudolph. I thought I was a technical analyst king. I looked at the chart and I say like, okay, it's gone this, this, and this. Now it's going to go this. I took some trades and I made a lot of money on my demo account. I continued this on a live account and I like doubled my money in 2 or 3 days. And then I said, right, so this is going to continue to happen every time. Like I've cracked the codes to markets. And I think it was oil. And I just took a massive long position, leaving absolutely no margin on the account because I'd done the exact same thing 4 times before. And then I did it again and it just tanked. And I woke up the next morning and my account was on 0. That was all my savings as an 18-year-old. So it was pretty heartbreaking. But yeah, that was a tough lesson to learn, to swallow. Like just because it worked once doesn't mean it always will work.
Yeah. I mean, I've been in markets for so long and probably every bias I've probably had at some point. But I guess the most recent one that is a standout is the sort of crypto frenzy. Just sort of buying it without any pre-plan, then just sort of almost, we're going to touch on it, confirmation bias. You just read positive stories about it without actually really knowing. When I look back, my initial view was the Emperor's New Clothes. I had no idea what it did, blockchain, all those terms. And I just made money, and I got lucky that I didn't lose money. I was definitely just trading without any real logic. It was just, I guess, touching on a bit of FOMO as well, but just in it and in it and in it and just thinking, oh, it's just going to keep going. maybe gamblers, fallacy as well. It's worked, so it's going to keep working. So yeah, I think crypto is a standout for me.
Yeah, I mean, for me, do you remember Blue Jay Mining?
Yeah, this still gets banded about once a week.
This stock. I mean, this was kind of 2017, I think, 2018, right? And everybody was talking about this stock, a penny stock. It had gone from like 2p up to 20p. Had the biggest store of some mineral in Greenland that had to do something to do with paint. It was the biggest asset ever. And it was this huge promotion, right? Loads of people were talking about it. Not being aware of my own bias, I hear people talking about it the whole time, right? Everyone's saying, this is the stock, this is the stock. So I remember buying at 18p. I remember buying at 22p. And I guarantee I top ticked that flipping thing. Soon after that, you know, I was the reason why it came down. Clearly, I was last of the story. It was almost like the taxi drivers were talking it, and this thing just fell. They've since raised money. You know, turns out it's bloody difficult to build a mine in the middle of nowhere in Greenland. Do you remember a friend of our show, James, had been on a trip recently with one of his clients to Greenland, and he said it's so vast. It is so vast. They have to raise so much money to build the infrastructure. Yeah. Anyway, my confirmation bias. I was looking at this thing through rose-tinted glasses. It could not go down. Lo and behold, yeah, it's now worth, at last check, 1/3 of 1 penny. It's got a different name to try and shake the moniker of it. And yeah, if you're invested in it, come to me. I'll you know, we can go for a drink. We can talk therapy. Which brings us on to confirmation bias, right? So this is where we start to get into the meat of what we're going to talk about. Confirmation bias. It is the tendency to focus on information that supports your pre-existing beliefs and you ignore contradictory evidence. How many times do we hear clients say, you know, it couldn't possibly go down? You're reading all these news stories. Trump is a great example. Trump, you know, he comes out with some ridiculous things. Politically, he's very charged. I remember in his first term, everyone thought the market was just going to completely crash because he's a lunatic, he's a cartoon character, of whatever. And this thing just roofed in the face. And people were so hung up on being offended or jilted or kind of taking his politics into view, that they would short the US stock market because of that. And no matter what, you just could not get off that.
Yeah. That's the problem, really. Like when you think about these sort of stocks that you have sort of, or politics that you have a sort of moral view on it, the market doesn't have a moral view. They don't have any ethics. They don't care. They care about the results. They care about the figures. They care about the outlook. And I think that's the really problem when you sort of, you mix in your other, you know, you should only use your brain that's focusing on, you know, the statistics, what's actually happening, and not your sort of humanitarian brain, because that won't cut it, you know. Look at ESG. I mean, it's not giving the results that you want. And when you like mix that in, that's when you end up on the wrong side of the trade.
Yeah, I think confirmation bias as well is, you can get it across all time spans in terms of trading plan. So I think a lot of people get caught in confirmation bias when they're offside. They'll be in a position when they've got a trading idea, it goes against them, and then all they do is look for news to validate their original pre-trade idea, which since it's been put on has been proven incorrect in the short term. They're looking to validate it when they should actually be trying to challenge it and say, is this going to get any worse? What's the maximum risk I'm willing to sort of, to risk on it? But you also get very short-term ones on knee-jerk news. Things about something like, I don't know, the mini budget. Went into that weekend at like 110. What was it, September 22 or something like that?
Cable.
Yeah, cable went in at 110. I can't get any like people buying it ahead of the weekend. Monday morning, 103. Absolute shocker.
Well, it's the same recently happened, right? Nvidia can't possibly go down. The US stock market can't possibly go down. I think the biggest example I've seen of confirmation bias, Ronnie, were you even in the markets at this point? Pre-COVID,
no.
I'm guessing no. Do you remember Tesla Q? Do you remember these guys?
Tesla Q.
TSLAQ. Do you remember seeing this all over Twitter?
When was it? No.
So the idea behind this kind of community was they were so biased against Tesla, right? And this is when the stock, in today's money, was trading like $30, right? It's now trading thick end of 400. And the idea being that when Tesla gets delisted, the stock ticker gets a Q put next to it to say that it's like a disqualified share. And Tesla Q was an echo chamber of negativity. And everybody was confirming their own bias. Like, I remember seeing a story of, the early days, the reports of Tesla when they were trying to ramp up production is they were low quality cars, right? The giga presses weren't working properly. And every time there was something slightly wrong with the car, Tesla Q would light up. This thing was like someone, I remember seeing a picture once of a Chinese, one of the Chinese gigafactories with a parking lot full of Teslas. And one of them had a crack on the windscreen. And like the army of Tesla Q guys, someone had got in and taken a photo, and then he put the drones up, and you see, oh, there's hundreds of these. They're all this is worth, millions of pounds worth of stock. And people were piling in short. Now, this was the time when, EVs were just kicking on, rates were zero, everything was moving in their favor. They were raising money at high prices to be able to then go and pay for all these things. I lost countless clients trying to short, and everybody was pointing at Tesla Q as like, there's all this very well-founded research, right? You can't deny these guys are going and doing the legwork, but fundamentally could not escape the view that Tesla was going to go to zero. And look at what it is now.
Yeah. Do you think there's an order to biases? As in, so confirmation, does that lead to gambler's fallacy? Does that lead then onto risk loss aversion? I wonder if there is a process where one leads to another.
Well, I think you look at the whole picture, right? As a human, we're probably, I know that we're not built for this, okay? Trading is a weird game. We're built for fight or flight. Hundreds of thousands of years worth of biology. We are built for fight or flight. We're not even built to look at screens, right? That's why I wear glasses. It's why we've all got backache. We're not built for this. Trading's a weird.
Emotional, right?
We're emotional. Yeah. And Ronnie, as you alluded to earlier, you've got like the kind of caveman brain, and then you've got the kind of thinker's brain.
Yeah.
And when things don't go your way, the caveman brain overtakes.
Yeah.
Because you might have some logical plans, you might have some things set in place, you might have some rules, you might have some stops. But as soon as the caveman brain starts to overtake, you're moving stop losses, you're buying the dip, you're kind of adding to a loss-making position, you're fiddling around with it.
Yeah, that's the sort of fallacy that we always tend to have. So I remember we had this one stock in Sweden, it's called Fingerprint.
Fingerprint cards.
Yeah, you guys remember it, yeah? So they were early on with the fingerprint sort of reading technology. And so when iPhone and Android and all of these guys came out with the home button of fingerprints, they just roofed. Everyone was talking about it. I was working at a hotel at this time, and I was a waiter, not even a waiter, I was below the waiters. And the waiters and everyone was talking about it. I'm putting all my pension in this, I'm getting out of this, I'm gonna get out of it. And then, face scanning comes out, and the stock's worthless. Now it's trading at 1/100th of what it used to do. But everyone was saying, no, it's impossible. It'll come back.
Everybody's confirming.
Everybody's confirming. And you look around, the other waiter's saying it's going to come back. The third waiter's saying it's going to come back. And you're saying, hey, we can't all be wrong. What you're. And I was talking to one of our clients the other day. He's a big short seller. And he was saying, as soon as I place a trade and I know that it's the wrong, I feel it in my gut. But in the beginning, he's like, what differentiates me from now than 20 years ago is I don't ignore the gut feeling anymore now. So he has that sort of caveman thing where he just goes to his emotions and feels like, all right, I'm wrong, get out of it. But what he did 20 years ago was, all right, I'll just stick to it. It's going to turn around. So you always have to sort of fool yourself almost a little bit.
Well, this is why Tasty went on tour around the US called the unlucky investor, right?
Yeah.
Every trader's an unlucky investor. So look, what do we do about it then? Okay, so Warren Buffett, the big man.
The goat,
right? He says the biggest thing to try and get around confirmation bias is to diversify the inputs to your decision-making process. Okay, so you've got to use a variety of sources of information. And there's a really good website that I can recommend to everybody called ground.news. And these guys, what they do brilliantly is you create an account, and they're a news assimilation website. And what they'll do is they give you a score of left versus right. And so if you naturally find yourself reading kind of left-leaning articles, it will have a thing that says you have not seen this is in your blind spot because it was written in the right wing. And so you've got an ability to then try to get out of your echo chamber. So Big Buffett says diversify your sources. Ground.news. It's brilliant.
Never heard of that.
Ground.news. They were a YouTube sponsor on Porter's website, a YouTube channel that I watched. They're really, really good. Peter Lynch, who is a famous investor, he says, look, you've got to set specific criteria for making your investment decisions before you enter the market. It's what we were talking about last week.
Yeah.
It's being mechanical, stops, entry conditions, drawdowns, P&L ratios, percentages of your account, because then it kind of becomes a numbers game, as opposed to a feeling game.
Yeah.
It's sort of like I was reading like an old interview with, do you guys remember the hedge fund Tiger Management? Now they have like the Tiger Cubs.
Cubs.
Yeah. So he shut his hedge fund down during the dot-com bubble because he had his, like David Lynch says, he had his sort of, Peter Lynch says.
Peter Lynch,
not David Lynch, our colleague. So he had his sort of like set criteria of what he was going to invest in and what sort of ratios he was looking at. I mean, if we think that the US markets are overvalued now, trading at what, 25 times forward PE earnings? They were trading at 80 times during the dot-com bubble. And he just refused to invest in these dot-com stocks. His traders quit because they say, we're missing the rally. His investors say, why are you not investing in this? And he's like, this is not part of the game plan. This is not the criteria that I have. And he shut down his fund rather than investing in these stocks. And, you know,
which he would have been ridiculed for.
Exactly. Yeah. And now, with the answers at hand, he was the right one because he had a clear set of methodology that he followed.
Is that hindsight bias, though? Have you got hindsight bias?
Well,
let's. I mean, you're completely right. I mean, one other thing you can do that was actually suggested by a kind of a professional poker player called Annie Duke was take a personality test. You know, try and figure out where you're susceptible to these things. And I found a website called 16personalities.com. You can do a 10-minute personality quiz, and you can check out where your blind spots are.
I'm afraid of the results of that one.
Do you think someone like the Fed, when remember coming out of COVID, the whole transitory, inflation is transitory. Do you think they were ignoring data and therefore had some sort of confirmation bias? With data, everyone was saying you've got to raise rates.
Yeah,
you're too slow to act.
You can totally see that.
So it's not only average Joes like us who get it wrong.
Oh, yeah, but it happens in every walk of life, right? How many times do you drive down a country road and you're convinced you're going to find someone that's driving like 10 miles an hour below the speed limit? You've got that confirmation bias. It's just always going to happen.
Yeah.
Let's move the game along, please. And speaking of games, we're going to talk about gambler's fallacy. Now, have you ever heard of something called the Monte Carlo fallacy, gents?
Yes.
I did.
Yeah?
In my research in this. Yeah.
We've taught them well, guys. Okay, who wants to furnish us with the Monte Carlo fallacy?
Isn't it the fact that, so you think that just because something's happened several times, surely it's going to change? So, for example, like in the roulette table.
This is it, right? So what happened in 1913 in Monte Carlo?
Wasn't it that it came on black like 76 times in a row or something like that?
26.
26.
That's what I meant. It's just the pronunciation. You guys are misinterpreting it.
Yeah, so the Monte Carlo casino, one of the world's most famous casinos, famously, on the roulette wheel, the ball came black 26 times in a row. And every time that it did, people were betting that the next ball was going to be red, right? But every time the spin of that roulette wheel goes around, it's not 50-50 because of the two zeros. So it's something like 48.5 green, 48.5 red, with the other two being zeros. The coin flip came out tails, aka black, 26 times in a row. So what does that teach you?
It goes back to the previous podcast of Axel. Is how many trades, incorrect trades or wrong trades can you have in a row? People just go, oh, I won't be wrong next time.
Yeah.
Well, to put it to you, right? Have you ever thought stock was due a bounce back because it's down?
Oh, yes.
Everyone has.
Oh, yes.
Everyone has.
Or how many times have you made a loss-making trade and you revenge trade to get back in because you've lost 3 in a row and you go, the market owes me. The market owes me.
Trading's never good.
Yeah. I mean, for me, it was Moderna, mRNA.
Moderna,
right? I got fully through my confirmation bias. It was a podcast that I listened to during COVID, and you were thinking all these RNA vaccines. This is the best thing ever. We're going to be able to solve COVID. Done. We brought a vaccine to market. Everyone's going to be, everyone's saved. And then they said, right, they're going to take aim at cancer. And at the time, some family members were going through it. I was like, this is fantastic. This is going to be the best thing. This company has to continue to keep growing. Since then, it is down 91%. Right? But every time it dipped, I thought everyone's got it wrong. It's dipped yesterday. It has to go up today.
Yeah.
And it didn't.
It kept
dipping. Yeah. It kept dipping. You know, it's still on my watch list because I'm an addict and a junkie, but I cannot take it off my watch list because it's going to turn. But I'm aware of it that the past events do not influence the future.
Yeah, that angry trading and that sort of revenge trade. And I used to work with someone who's brilliant, who used to just sum it up well. So we'd be sitting there and it'd be a big move and you think, oh, market's got to go up. It has to go up. I think this is going up. And he would, without looking up, without coming up above his screens, market doesn't give a what you think. And he would just completely go, you've got to base it in facts. You can't just keep saying, I think this is going to happen, this is going to happen. Market doesn't give a what you think. But it's great.
Yeah, my recent one that I had, which was just now, when back in December, when Novo Nordisk came out with that the weight loss of the trial showed about 22.5% weight loss rather than the expected 25%, and the stock dropped like 20%-ish or something. I said, mate, this is my time to buy Novo Nordisk. And it's been on that. It's been in and around that ever since. It hasn't bounced back. It's still on that same level that I entered on. And it's just because it came down, I thought, okay, but it went up all this way before. Surely now it's going to come back to the levels. Everyone's going to buy the dip, just like me. But no one cares about what I'm doing.
I've lost, again, look, we talk about the Tesla trade. I've lost so many clients over the years trying to short the DAX, right? The DAX has probably been one of our most popular products. Certainly in the 11 years that I've been here. I know everyone's trading a bit more of the NASDAQ these days. But so many people are just trying to short it because they think the German economy is the same as the German stock market, and it's not. You know, the German stock market's full of these big, cumbersome manufacturing companies that don't take much to get a move on, super sensitive to market risk. Yet they'll say, okay, because the Footsie's up, I'm going to try and trade against the DAX. And it's just, one thing does not mean the other one. And you just keep shorting it and you go, right, well, this thing is it's taking all my money from me. I cannot get over this thing. I'm going to have to kill it to win. And you just lose this thinking side of your brain to it. And look, I mean, the impact is it can go two ways, right? You can hit lucky, you can get a hot hand, you know, to borrow another poker phrase. You can get overconfident and you can try and take more risky bets. What did we say last week was the biggest killer of retail accounts? You know, not using stop losses and having your position sizing wrong. So if you're on what you believe is a hot streak and you just go, right, everything I touch turns to sold here, right? Who was it that said that? That was, it was on The Apprentice.
Was it?
I
never watched The Apprentice.
One of the wide boys on The Apprentice. Everything I touch turns to sold. But you get to a point where you think, this is it. I've got this. I've cracked it, right?
Yeah.
What you said. But then you just don't, inevitably, because you start to forget your fundamentals. You start to forget risk management because you're on this hot hand, and you start to think that because
you're just sort of like Icarus dilemma, you know, you fly too close to the sun, you get burned because you think that you're untouchable. But the market does not discriminate against anyone. Anyone can get it any day of the week.
Gambler's fallacy. I've seen people in positive positions, gambler's fallacy, and it go horribly wrong. I can remember Gulf Keystone was one.
GKP.
People were buying it all the way up. I can't remember exact price, but sort of buying it all the way up, adding and adding, so rolling their profits into more positions. Drilling update, oh, there's no oil, it's water. Bang. Money's all gone, left to debt. I've seen it after the financial crisis, people buying banks all the way up, thinking it was never going to end. Pullback, done. So you can get it in the positive sense as well. You don't have to start from a negative. Almost that positive reaffirms, you lose sense.
So what do we do about it then? How do we help people?
I think you have to sort of be critical to what you're doing. And like, just as you're critical to your losses, you realize, okay, what did I do wrong here? I didn't put my stop loss. I didn't manage the percentage of my account that I put into this. You have to be just as critical to your wins, right? Because just because you're winning doesn't mean you're doing something right. You could just as well just be lucky. So you have to sort of build up your patterns. Just as you look at the charts and build up a pattern, you have to look at your trading history and build up a pattern and see, when I do this, when I have this sort of methodology, it goes well, and here's what happened. So always sort of analyze and try to build up a methodology to what you're doing.
I think you have to fact check a lot as well in terms of when there's new information or new news, what impact does that have? You have to sort of look at the facts, and I think that's key. People just kind of continue to use the same thought process when there's new information. So when the facts change, so should your opinion, right? You need to reevaluate. And using this gambler's fallacy, I don't know, something like, I know, we all know people who've got 4 boys or 4 girls. there's an element of gambler's fallacy there, right? Yeah. But those will go.
Speaking from so hang on, how many kids have you got these days?
4.
4 at the moment.
Girl, boy.
Yeah.
So there was no gambler's fallacy.
Cracked it.
But I know people have gone. The logic is it's 50-50, right? But they'll go, oh, it's got to be a boy next.
Yeah.
It's got to be a boy. And I know people who've got 6 girls.
6 girls.
Yeah.
Bloody hell. I mean,
But again, that goes back to it, right? The facts are, it's 50-50. It's not more likely the outcome is going to be different. So, yeah.
I like shout out to our friends over in Chicago, Tom Sosnoff, who I think is one of the leading kind of people in the discussion around mechanical trading. What he says is be absolutely ambivalent to the underlying. Doesn't care what he's trading. But for Sosnoff and the team at Tasty, options are very kind of mathematical and probability based. In the UK, I think we've got we have this kind of knowledge. We're nervous of them because they're complex, right? And their take is complexity is good because it means you have to work at it, and actually that gives you other things in your life, right? You kind of be disciplined, and they really like it. But he says he doesn't care what it is, right? Look for the setup, look for a probability of profit, be strict with your risk management, and actually it doesn't matter what it is. You could be trading the euro, you could be trading, Palantir, you could be trading whatever if the setup is correct. So be aware of what you're trading and having that story behind you to try and take that away. Right, we need to move on. Because we are chatting too much.
That's Ronnie.
That's Ronnie, yeah. Well,
sorry, guys.
Not at all. The big one, right? This for me is the big daddy of problems, loss aversion. Anyone got a definition for the gang?
Whoa.
I have one.
Go for it.
Short one. The tendency to hold on to losing trades longer than we should because we fear realizing the loss.
Yeah. I think, and we alluded to this on the previous podcast. In life, losing means it's horrible, right? I've lost. I've come second. The world is built around winners, right? And we're not talking about the kids' sports day right here. There, everyone gets a prize. We're talking about losing is fundamentally not something that we deal with. If we're presented with a challenge, we fight or flight, right? With the expectation that we come out and we win. This emotional impact we have with losing really impacts trading, because trading, we know, and we looked at it last week, you can run a trading strategy with a 30% hit rate, meaning you're going to lose 70% of your trades. You can run a 50-50, right? You can flip a coin, you're going to lose half your trades. Losing is part of a strategy that's part of a profitable strategy. And so it should be seen as almost like a piece of working capital. The term loss aversion, to add to your definition, Ronnie, it was first identified by 2 psychologists, and I'm going to absolutely butcher their names, Tversky and Kahneman. And the theory suggests that if 2 choices are put before an individual, both equal in terms of monetary value, so here's £5, or I take £5 away, right? Your net change in wealth is 5. Every single person goes for the gain, right? No one wants to take the £5 loss, even if they then started to kind of tweak the study to say, right, you can take the £5 loss now and you'll get £10 tomorrow, or something like that. They still all took the higher present value and took the £5. And there's been loads of studies that have done into it, right? The emotional impact of a loss, it's actually believed to be twice as strong as the impact of winning.
100%.
I think I read something similar along the lines of, well, they did a study where they gave people outcomes. I can't remember what the exact outcome was, but one was just solid. There's no negative here, but this is the benefits. There's one negative, but the overriding outcome is better than all the positives here. And everyone, well, most people took all the positives. Just because there's a hint of a negative there, they wouldn't accept it, even though the outcome was better or beneficial compared to the other. So I think that goes for trading as well.
I've actually dug up an interesting example of this. Are you guys familiar with Bill Ackman, CIO of Pershing Square? I think it's
Pershing Square.
it's
Herbalife.
Herbalife Giza. That's the one. He got a proper short squeeze there by
Herbalife Giza.
He got a proper short squeeze. Before I dive into my example here of him, did you guys watch the documentary on Herbalife? When he did a documentary about his Herbalife short, and he was going to these like immigrant communities who were being sort of tricked into joining this scheme or whatever it was, and he went to this like Mexican church where no one spoke English and everyone came with just the clothes on their backs, and he's saying, yeah, I'm from an immigrant background as well, my my great-great-grandfather was Irish. It's like, man, come on. Anyhow, that's not the biggest L he took. The biggest L he took was a pharmaceutical company called Valiant. Valiant?
Oh, Valiant, I remember these guys.
Yeah.
VLRX, what was the ticker?
Yeah.
Something like
So
that.
they had, their strategy was, instead of spending all this money on R&D and developing a new drug, we're just going to buy up a bunch of small companies, medical companies, and we're just going to build a portfolio like this. And, you know, they got a lot of praise. They'd cracked the code of growing a pharma company. Bill Ackman built up into the position all the way up to $250. Started coming out that they're manipulating their balance sheets. They're obviously hiding all the acquisition costs, and they're not really taking all of this into consideration. This started to come out. He continued to build into his position while everyone was going against him. As he said, the facts changed, but his opinions didn't. So he ended up, the stock fell from $250 to $10 until he eventually closed out. And he lost $4 billion on this.
Mm-hmm. So he just didn't take the pain?
He didn't take the pain. And then he got an even bigger pain to take because he refused to take it on the chin.
Yeah, zero risk management. I mean, we speak to clients all the time, and you see people that are in, that have got their trade analysis tool, which is the piece that we were speaking about again last week. Sorry to keep plugging the episodes, but genuinely for listeners, what we did last week was a real deep dive into the statistics, and this was the start of our kind of Tradecraft series. But we speak to people so often, retail clients, that have got like a 70% profit ratio, right? They're winning all their trades, great, fantastic, that you're closing, rather. So sorry, all the trades you're closing are profitable, and then you look at open positions and it's a complete car crash, right? Yeah. And it's so sad to see that we can continue to keep talking about these things, yet actually putting them to practice is so freaking hard.
Yeah.
It leads to things like over trading. Right?
Yeah.
If you're in the hole, if you're on tilt, right, in poker, if you're on tilt, you're making decisions that are not based on your plan, and that loss aversion motivation is so strong. Yeah. As soon as you see a loss-making position, if you don't have a stop on it, you then probably buy the dip, and you're now adding to a loss-making position, which we know statistically is a terrible idea. Yeah. You are moving stop losses because you go, I'm not feeling this. I'm going to lower my stop. I'm breaking my plan. I'm breaking my rules. Again, we can model it to the nth degree, but these things are low edge. Think about it. If you had a risk manager on your shoulder and someone was holding you to account, they're going to look at you and go, what on earth are you doing? Yeah. And that thinking, logical brain that you have when you put the trade on is out the window. The caveman's in control. Yeah. Right? The caveman's in control. He's beating his chest. You're scared. The market's going to tell you you're wrong. But the market, again, it doesn't owe you anything.
No. I think you're right. I think this is by far the biggest one. Like, it's huge. And I've had examples where you speak to clients, like you said there, Luke, their win rate's 90%, 95%. But what's more worrying is they don't see the link to their open P&L. Because in their mind, it's not a loss. But they'll go, oh, it's fine. When that comes back, I'll be fine. But they don't link the two. They just think they're a rock star trader, and that'll be all right. In a few months, it'll come back, and I'll be absolutely fine.
What happened to me, right? I didn't cover my Blue Jay position. Yeah. I could have got out of that at scratch, right? As soon as the tide started to turn, instead I took a 70% hit on it. Yeah. Blew up my ISA. I didn't have too much money in my ISA at that point because I was just a wee whippersnapper, just a couple of years older, maybe, or minutes older than Ronnie was. But, you just struggle with this thing.
But I think you're right. I think that the problem is people are so uncomfortable taking a loss when, I don't know, whether you're looking at percentages or actual monetary terms. Let's say you're down 10 grand. I can't take a 10 grand loss. Okay, well, if I spoke to you in a month's time and it's 50 grand, you'd have happily taken that 10 grand. Yeah. So kind of, in a way, you've kind of just got to go, right, that's it. That's my pain. I've drawn a line under it. And I coach a girls' football team. And when we have a bad result, I tell them there are no success or failures. There are only outcomes. Yeah. It's how you interpret it. So I think people need to be comfortable with that. Take the loss. What have I learned? What could I do better next time?
It's the Conor McGregor model, isn't it? His book was called Win or Learn. No, excuse me, it wasn't Conor McGregor. It was his coach, Coach Kavanagh. When he was on top of the world, Coach Kavanagh is this Irish MMA coach, and his book is called Win or Learn. That's what it is. And I think we have to continue to push the rhetoric that you make a trade is a shot into the unknown. Okay, you're taking a view to try and guess the future. Who knows what's going to happen?
You're skewing it, given some research and some background, some analysis,
which we know
trying to get it in your favour, right?
Which we know could be biased.
Yeah.
Could be.
You know, you've got a mate down the pub that said, you know, Blue Jays the next big thing. You're biased to then look for reasons why that's the case.
Yeah.
But you can do all the research in the world, but you can't predict the future. You don't know when the next COVID is coming, next Black Swan is coming. No one can predict that, right?
No.
There's always an element of insecurity there.
Well, tell me who called Nvidia to be down 17% on the open 2 weeks ago?
Yeah, that was a shocker.
Yeah.
No one, right? You know, DeepSeek, this relatively unknown LLM model comes out, and all of a sudden your portfolio is destroyed because you haven't managed risk.
Well, because before that weekend, there was no real challenge to them, right?
No.
And everyone was like, oh, it can only go one way.
Yeah.
And again, that is that confirmation that.
Yeah. So look, what again? Great. What we're talking about here, loss aversion. To kind of just summarize the topic. Actually, the one thing I think is really interesting when it comes to retail clients is cash on file versus your account's equity. Okay. How many times do you see someone that doesn't want to take the loss? An example is if, let's say, for example, you've accidentally closed the trade, right? From a trader's perspective and from a broker's perspective, the way that we'll approach that is if you sell something accidentally at a price of 10, and by the time you buy back in, it's 11, you've realized any P&L on that first trade, right? That's gone, okay? Yeah. It's come from unrealized P&L, it's now realized P&L. Yeah. You buy back in at 11 and the market hopefully moves back up in the favor, right? What does that cost you? I know because I've spoken to so many people, they'll say, well, it's cost me my realized P&L. Let's say you bought at 20 and you've lost 50%, right? No, it hasn't. You've bought back in at 11. So you've sold at 10, closed, you've bought back in at 11. It's cost you 1 penny. Yeah. Now, you know, depending on the situation, depending on how quick, it could be something maybe first time, we might be able to do something with you to help you try and get back into that. But the amount of clients that will say, no, I want my P&L refund from that first trade, because that cash figure is what people are valuing their account at, which it's just, cash is not king, equity is king.
Yeah, I have calls every single day with clients who get stopped out. They call me and they say, can you put me back on? And every time I say the same thing, you're in a better position to get back in now.
Oh, if the market continues to fall, you're in a wrong position. You've sold at 10, the market's now at 7. Buy back in at 7, it's cheaper.
Yeah.
Happens
now I
all
want
the
to
time.
go back in on my open level.
Yeah.
But it goes back to that point I was making about the study, right? The benefit, the outcome is far beneficial here. No, but I can't take this hit. I can't, psychologically, I can't take the negative P&L. It's just absurd.
You're just growing the unrealized.
Yeah, absolutely, yeah.
Yeah, and another common thing that we see with people that are loss averting is being both long and short at the same time.
Yeah.
You know, it's spread betting and CFD trading, our bread and butter, is over the counter, right? So you can open a long position and you can open a short position. Now, I personally don't recommend it because I use the analogy when I talk to people that do this is imagine you're in a pub and you've bought a beer and you get a receipt, right? Ronnie, in your instance, it's a soft drink. Okay?
Yeah, exactly.
Right? We've bought a soft drink, we've bought a beer, you get a receipt. And then you straight away sell the pint back to the bar or the soft drink back to the bar. You've now got 2 receipts. You've got nothing in hand, right?
Yeah.
That price of that drink can move wherever. You don't make or lose anything because you've got no exposure, right? But what you're doing by having that long and short position is your loss-making position, which is typically where we see people then trade against it. You don't realize that loss.
Yeah.
And you neutralize it, right? And so people talk about hedging strategies. I think sometimes it might make sense if you've got a long-term view on something with a long position that you've been adding into and nurturing, and you think over the weekend it might go down, so you might neutralize as opposed to take it off. More often than not, it's more expensive to do it that way. You might as well take it off. But that to me is, if we're talking to you and you're listening to this, and long shorts are something that you do, if you know that you don't take P&L off the table, or you don't trade with stops, these are key indicators that you've got bias, right? Yeah. And so how can we advise people to not do this, right? Howard Marks, Oak Tree Capital. So he said that you have to start small, right? If you're a new trader and you've got a small account and you're confined by margin, you don't have the ability to trade that big. If you start small on 10 pence, 50 pence, £1 a point positions with very rigid P&L, psychologically, you're kind of conditioning yourself that losses are part of the puzzle. So when you do scale up, you're not scared by that. The fear, that kind of caveman brain doesn't overtake you.
Yeah, and look at the success of Howard Marks. He's a contrarian at heart. You know, he's piled into like these sort of distressed companies, distressed assets, because the confirmation bias of everyone else, they're just reading the negatives about it. and he sees that there are potential. He's a contrarian, so he doesn't fall into these biases. And look at the result of him. How many billions is he managing?
I think as well, there is, I often put it to clients that the difference between someone who would be considered a professional trader, or someone that does this for a hedge fund, or someone that does it for a bank, they have people telling them the rules, right? So they'll have a risk manager, they'll have a compliance manager, they have their head of dealing that tells them how much risk they're able to take. Retail traders are more flexible than that, which is to their benefit, but also to their detriment, because it means that you don't have someone there taking on it. So one of the pieces of advice, and actually to kind of bring this discussion to its conclusion, and then we can get onto the margin call, which we know is the reason why people stick around this long, is to summarize it. So gambler's fallacy, loss aversion, confirmation bias, along with all the other biases. Let's just sum it up in a couple of points. What would you say is the number one tip that if you are aware of these things, what can you do about it?
I think given the loss aversion is the big one, I think it is be comfortable with the loss, because I think that one then leads you into other biases. Honestly, I think if you're opening a position and it's incorrect, you then sort of delve into confirmation bias, gambler's fallacy. If you are getting, again, to go back to a previous episode, pre-trade parameters, stop and limit, be disciplined, be comfortable with that loss.
Yeah, I mean, you're absolutely right. The loss aversion is the sort of gateway drug to all of the other ones.
Yeah.
But the one thing I would say, borrowing for Sean, is if the facts change, so should your opinion. Don't be afraid to change your mind. It's not your political view. It's just the view on what's happening next in the market.
Yeah, it's not a football team.
Yeah, exactly. You can change your view.
You can totally change your view.
Going back to your point that banks and stuff like that, they have all the parameters set for them, but they also have research teams and producing notes and giving them new information. So they've got a leg up already, right?
And there's plenty of sources out there. I mean, I actually think one of the big ways to actually kind of start to be conscious of your own bias is talk to people, okay? And trading in itself, right? IG is an app on your phone. It's a website that people visit, and it can be quite lonely. Like when we speak to clients and clients come to events with us, feedback that we often get is that having that ability to network is really helpful. You know, I'm going to plug the show here, but Trade Live with IG every morning at 7:30. If you want to get a little bit more Ronnie, if you know what I mean.
Or Luke.
Ronnie. We still haven't convinced Sean to come on the show yet.
No chance.
Having this recorded and on screen is jarring up, Sean.
Absolutely.
But talk to us, right? We run a trading room every morning, 7:30 till 10:30, and all of the guests, when we're in the studio, we can see the chat. Clients. It's becoming a process where clients are talking to each other and sharing ideas. So, what do you think of this? I like this, and people are contributing. So, I think having that community is really strong. So, I would also say to kind of echo what you guys are saying, have a plan, stick to it, take multiple sources of information in, be aware of the style of writing and what you're reading. Right? Try not to listen to it in an echo chamber, and try and externalize your opinion. Because I know personally that if I bottle something up, I don't talk about it, I'm going to probably get it wrong. We on desk, all we do all day is talk to each other about certain client stories and ideas, and is this the right way to approach this discussion or not? It's got to be like that.
I think that accountability is key. I hadn't thought of that. I think, like I say, vocalising, even if it's in a community sort of chat, someone's going to hold you accountable. Someone's going to call you out. Yeah. So there's something in that. And I've got a client who says it's a lonely game. He trades himself at home all day. He will literally talk out loud his trades because he thinks that gives him some accountability. So I think it's a good one.
Everyone needs a cynic like Sean in their life.
Oh, yes. On that note, let's bring in the margin call.
Let's move on to our favourite section of the week, the margin call. The margin call, for those that have just joined us for the first time, it's our favourite section of the week. We want to break down out in the market of the last 2 weeks, who is the biggest loser, right? Who's taking the biggest L? Who's on margin call? Who's getting the phone call from risk and saying, you need to do something about your positions. You need to check yourself before you wreck yourself. So our guest of honor today, Mr. Agnig, we'll let you start.
Well, yes, it is my first margin call, like I said, and I am going to take it from the big bad Palantir, the founder of Palantir. He's saying that he dreams about crushing the enemies of America and making them fearful. That's what he wakes up and think about every morning. And it's a bit extreme, you know. If
You get rinsed for it as well. You
Yeah,
get absolutely
like-
destroyed for these.
you know, sure enough, like he's American like data guy, and he talks about crushing and destroying the enemies. But imagine if someone who looked like me, like with my beard, came on and like I wake up in the morning and I dream about crushing my enemies. MI5 would be banging at my door like straight away. Like the guy's just getting away with it, and I'm not having it. I'm margin calling him.
You know, you're going to margin call it. Brilliant. Love that. Good debut. Strong debut.
Thank you.
But, I mean, look, but let's link it back to bias. The stock price is roofing. Right?
Yeah.
So he's coming out with all this wild stuff. It doesn't mean the share price is going to come down.
No.
So don't wreck yourself because you disagree with him.
Because the results, the figures came out were super positive. They beat the estimates.
Shawnee?
I have to let you go because my original one didn't make it through the pre-show sort of censor.
Pre-show screening.
Yeah, it got edited. Couldn't make the cut. So I'll let you
Something
go.
to do. Well, let's give him.
No. Let's just move on.
Let's just say there's headlines about something to do with the colour blue the last couple of
let's
days,
move
right?
on.
Yeah, we'll move on. For me, I'm margin calling the Grammys. Right, the Grammys just come in. You know, I'm a big fan of hip hop. Ronnie, I introduced you to Doechii. She cleaned up. Our boy Kendrick did well. Who did? I mean, the Grammys themselves, right?
I didn't get included in that, by the way. I just got overlooked there.
Oh well, there's no drill. There's no drill category on the Grammys.
Garage more your
Sean
thing.
is a driller.
All urban music.
Well, actually, do you know what? I've been getting really into Tribe Called Quest this week.
Old school, like that. Yeah.
Tribe Called Quest and the Roots has
Yeah.
been playing in the Moore household. But I'm going to blame the Grammys. Kanye West. Did anyone see Kanye West's, let's call it a stunt on the red carpet? Well, let's say it wasn't specifically Kanye, but it was more his wife. Bianca Censori was wearing the new Ye female dress that left a little bit more to be revealed. Anyway, she turns around with a fur coat, drops it, and she's pretty naked.
Wait, Kanye was in that pic?
Yeah. So they got booted out. The Grammys didn't have it. They said, "Put your coat on. Come on, you can't do this. This is a kid show. Get rid of them." They got booted out. Yet Kanye and Bianca have been trending more over the last 3 or 4 days as a result. And the Grammys, come on, taken out.
It's 2025.
But this is their thing, right? She does it all the time, doesn't she? I'm sure. I'm sure I've seen her like in Venice and whatnot, and like just being told to put clothes on.
Sure. Look, you did one about porn the other week. I'm slightly worried about your search history.
On the Grammys, I would say, who is it? The Smith. What's his name? The young one.
Sam Smith.
No. Jaden Smith. He's got the like castle on his head.
He's just weird.
What is that all about?
He's just weird.
It's called Fashion Guys. You clearly don't get it.
Yeah, sorry.
I mean, Will Smith is your dad.
Sorry,
so-
my black chinos and grey jumper.
Yeah. For everyone watching on the stream, this is Sean's uniform. There's a fashion trend called the uniform. So you wear the same thing and you expect it, right?
Yeah, this is my uniform.
Well, it started with like the tech bros, right? Steve Jobs, Mark Zuckerberg. Only difference is they wear like designer T-shirt for $300
Yeah.
and not the H&M one.
Yeah.
Not that Sean is wearing H&M. This is silk. Yeah.
Exactly.
You walk on the trading floor. We're Long Charles Turret and probably Uniqlo as well. Guys, thank you.
Finest.
Guys, thank you very much. That has been an absolute pleasure.
Who won?
Oh no, I think we're off the winnings and the
No
losing.
voters then.
Well,
I used to win all the time, right?
You did used to win all the time, yeah. Only because you kept talking about your PA trading account.
No, that was Pete. Shout out to Pete.
Shout out to Pete. R.I.P. Ronnie, I think you did well.
Yeah,
Thank you, sir. Thank you. Yeah.
If you have any feedback, please comment. I'm going to do the like and subscribe thing, but what we're trying to do is we're trying to build this community of people to talk about trading in the light of how it should be, and not just the panacea of profitability, right? It's real. We need to talk about it. Please, from my perspective, please like and subscribe to this show on wherever you get your podcasts. It's been a pleasure. Next, we're going to continue talking about psychology, or we're going to talk about stops. So yeah, look, guys, thank you very much. See you next time.
Sayonara.
Nice one.
The market went nowhere. But a lot of other things did move, so what were they? It's Tuesday, February 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. So we're going to banana boat our way through this hour here as we wrap up the futures trading day. SMCI earnings out here after hours. We'll get to that shortly. Just to quickly put a bow on the conversation from last call, we can share the screen right away. Dylan, when you're on vacation with your best pals, sometimes what you do is you rent a tube, an inner tube with your friends. Ryan, if you could please share the screen here just in case people don't know what a banana boat is.
I stand by my assessment that this thing is a floaty.
You go banana boating. And I remember this being a big thing in New York media at the time because Carmelo Anthony was like, yeah, there was no way I was getting on that banana boat with those guys. And he was our New York Knicks star. But banana boat trips aside here and salting the road, this was a road that really led to nowhere for stocks. S&P is down by 0.25%. The Nasdaq's down by 0.25%. The S&P is up by about 0.06. The Russell here lower by about half. The Dow Jones higher by 0.3%. The tariff talk continued as we go into today. The Tuesday session, obviously characterized by Fed Chair Powell's comments on Capitol Hill, testifying to the Senate committee today. He'll be in front of the House tomorrow. We do have a Trump press conference, more commentary on foreign policy. Maybe that's a driver behind what we're seeing in energy markets today. But oil, natural gas prices do trade higher. U.S. yields are up across the curve. We ultimately see gold, silver prices, they come back in, and the dollar, broadly speaking, lower on today's session. We can actually talk about perhaps the most interesting story here because Tesla is the one falling out of bed. I'm waiting on SMCI. And now we have the boss back in the channel. So Ryan, if we could get Sosnoff out, please. Tom, Dylan, if we're taking a look at Tesla stock here today, you mentioned that you're seeing this as a potential dip buying opportunity for share.
I mean,
that we're down 6%. Yeah. So what's your look here? Why do you think this is a dip buying
I love to
opportunity?
sell a spread. So it was a put spread, nice and little, and probably not 40 odd days out. But just something to get some long exposure to Tesla in the face of everything that's in front of us here, which is purely just a bet on my own, putting my money where my mouth is on the corrupt relationship between Elon Musk and the U.S. government and the benefit to his companies.
So sure, let's keep that in play as an idea here. What's with the Tesla underperformance recently? Yesterday you and I were talking. The three of us were texting after the show.
It doesn't. If it trades on its earnings, then it should go lower.
Is this also a play, perhaps, because of what's going on? Elon Musk's attention's divided right now. He just spread too thin. He can't pay attention to Tesla. This is obviously a stock of great interest. I still have XLY call spreads, which of Tesla is a significant portion. So Tesla going down doesn't do me any favors necessarily in the short term. But why now? I mean, why is the market now rejudging Tesla's share price after what's clearly a hand-in-glove relationship between him and the president?
You're asking me?
Yeah.
You're asking both of us? I mean, I think the obvious why now is where you kind of alluded to it, which is Musk is becoming ever more deeply involved in the day-to-day activities of the Trump administration, apparently living in Washington, D.C., if you were to believe the mythology. He's sleeping on the floor of the Eisenhower executive office. That's probably not actually the case, but metaphorically, it certainly appears to be the case. And the degree to which the Tesla boss is consumed by the Trump his interest and responsibilities in the Trump administration. It means he's spending less time making management decisions, one presumes, at any of his companies. Most importantly, Tesla. Now, one could argue the most valuable place for the boss to be is not making day-to-day decisions at any of these companies, but rather at the side of the most powerful man in the world, currying favor for massive future advantages. Although the degree to which that was hoped for based on the sort of immediate post-election run-up that is readily evident in this chart, obviously is being viewed more pessimistically now, insofar as it obviously is an expression of Elon Musk's basic massive distraction or even total disinterest in any of the operations at Tesla. Or it's real, or it has nothing to do with any. That's one possible answer. The other is Tesla is, for whatever reason, increasingly trading based on the number of cars that it sells, rather than on the ability of its biggest shareholder to gin up abstract future growth prospects to justify an outrageous multiple.
There's one other
thing, which actually was I was thinking about, but even before I bought, the thing that most gave me pause to at least stay small with the Tesla long position is the idea that full self-driving, which is obviously the sort of holy grail of the Tesla automotive platform. There was somebody I read. I don't know who wrote it, so I can't give credit where credit is due. But it made sense when I read it, which is that by the time full self-driving at Tesla comes online, shortly thereafter it'll become a universal feature at every car maker. Excuse me. So the idea that full self-driving is a massive point of differentiation for Tesla relative to every other car maker, which I think was a central part of the underlying valuation thesis for Tesla. That the argument that by the time it happens, it'll quickly become commoditized and everybody will have it, which struck me as something that certainly has some potential truth to it.
You mentioned this Tesla right now facing the reality of what's happening with its balance sheet effectively. Is it selling enough cars right now? Before we go into the AI conversation and thinking about perhaps the OpenAI story as it pertains to Tesla's share price movement today, looking over at FinViz, you mentioned Tesla's beginning to disappoint. The earnings, EPS trailing 12 months down 52.8% year over year. EPS quarter over quarter is down 71% from the most recent earnings report. So earnings growth, wrong direction, and they already have a PE ratio that's still astronomically high. Their forward PE ratio still astronomically high here. So there was this discussion point, is this another situation like with Twitter? Like, for those whose memories need to be jogged, when Elon Musk initially said that he was going to buy Twitter several years ago, how was he going to do it? He was going to have to sell some of his underlying ownership stake in Tesla, perhaps, or he'd have to borrow against it. Find someone who was willing to let him borrow against the shares to get the loan to buy Twitter. And so you had this song and dance where, okay, Elon Musk's attention is going to be divided. He's going to be using Tesla's balance sheet to purchase Twitter. As a Tesla shareholder, do you really, are you buying the company now because Twitter's a premium to the share price, or is it added to a discount? There was an albatross for a little while there, if you will. We had a talking point like Tesla has a Twitter problem, right? With Elon Musk buys Twitter, will the CCP and other organizations, other companies lean on Musk, other countries lean on Musk to, potentially take down free speech in that country so that he could keep his business operations open there? You could say in hindsight that wasn't an issue. I'm actually going to go the other direction and say I was proven 100% correct. Elon Musk is not critical of the CCP at all. When he says he's respecting free speech, as he said, he's respecting speech within the confines of each territory's laws. It's not a principle like anyone can say whatever they want, wherever they want, whatever they want. It's you can say whatever you want, whenever you want on this platform, so long as the government's okay with it. And that's been the approach in China, and that's been the approach in Turkey, and that's been the approach everywhere else. So Twitter hasn't been a problem for Elon Musk because he's complied. He's letting Twitter not be an issue and get in the way of Tesla. But if we're going through that same type of market misunderstanding right now, where we think this is an albatross, then maybe the OpenAI news is the reason why Tesla's down today, because it's a new shiny object.
And that's where I was about to go, yes.
Right?
But how many times has Tesla sold off and rallied back in a bigger, better way? I mean, every effing time.
That's kind of where
Every
we're rounding
effing
out
time.
to.
Well, not
So I have my own.
because it's lower today, and
No, I
not the day
understand, but
before
I'm
because it's
thinking back,
lower then.
I think it was December 22, maybe, right when
Yeah,
the
well,
whole
right. So
Twitter.
this is the timing thing, right? So this becomes a question of is this
Fair.
is tomorrow the day that it bounces?
So why don't I go with the old Spivak nibbler and just take a little here, take a little
like that.
later, take a little more
I like
later.
I like it. The Nibbler Classic would demand that there be some sort of an attempt to set a low, and we've not seen that yet. So for me,
So you're saying
there
the first
isn't
nibble and the nibbler needs some catalyst.
some catalyst. Show me a green candle. Show me some sign of technical defense emerging, and off we might be going. But I think, Chris, to your point, this is exactly what seems to be lining up. You have this situation where obviously Elon Musk is increasingly taken with whatever he's doing to support the Trump administration, and in the meantime trying to make a bid for OpenAI. So it's not like he's completely distracted from sort of other Elon Musk endeavors, but he is met with resistance from another Trump administration favorite. I mean, we just saw Sam Altman and SoftBank
So what's the
president.
OpenAI argument against? Why would the OpenAI beef drive Tesla in the tank?
Well, what I'm kind of trying to tell us, is a story that kind of mirrors what happened with Twitter. Because while Twitter ultimately, in the early days of that news being out there, was something that hurt Tesla's share price, obviously in hindsight, the story itself was incomplete. Because if you decided to look long Tesla on the basis of Musk buying Twitter, you caught the tailwind of that in November and December this year, when the share price shot up 92% from its pre-election level to its highs in the middle of December, right? So did Twitter help Elon Musk get Donald Trump in office? Yes, I think so. But that's not really the story here. The story here is, why are we slouching off today? If it's the initial, Musk's attention is divided and this is going to cost him his personal fortune, he's going to have to loan out Tesla shares and yada, yada, yada. We've seen this story play before. It's going to maybe take a day or two or a week or so for this to wash out. But does he even want to buy OpenAI in the first place is the question we have to be asking ourselves here. Because if he doesn't, then why are we even caring that this is the news that's driving Tesla down? Which is to say that, is this being totally ticker agnostic given the news flow? Are Dylan and Radigan or Dylan is Radigan, is Radigan, Sosnoff, and Batista all correct in saying this is a buy the dip opportunity? Because I think the answer could be yes, for another different reason.
It could be if it's confirmed, but for now, it looks like a very stretched thin executive is muddying the waters for a competitor. And if you were to rank the priorities and say, what is Elon Musk thinking about today? Some of it is Doge. Some of it apparently is trying to poke the eye of Sam Altman and OpenAI, to very deft response from Mr. Altman, and spare a thought for Tesla. Nobody's saying a word about it, even as its sales look not all that awesome. And so
I think we're missing
where is his head?
Right? If part of the process of getting OpenAI, so like the big story here, Sam Altman's removed as the head of OpenAI. And when that board removes him, as he returns to power, he slowly replaces the board. So it's people who won't kick him out of his job in the future. And he wants,
as you might expect,
he wants to transition the company from nonprofit to for-profit. Now, because of California, United States laws, for this to happen, we have to assign a fair value to the assets that the non-for-profit has. And the way that this is all working out, that Sam Altman's going to be able to buy these assets with a for-profit company from the non-profit entity. Where do you value those assets at? At an arm's length transaction in the marketplace, of course. who just set the price for Sam Altman to build out OpenAI in the manner that he wants to do it in? Elon Musk. He just made this unsolicited bid. He just said this is the market value for those assets that you're trying to spin off from your nonprofit into your for-profit, which complicates things because Sam Altman wasn't trying to do that for $97.4 billion. He was trying to do that for about $40 billion. So now he's got to raise a little bit more money here to accomplish this goal, or he's going to have to go back to the state of California, to the IRS, and explain, this is why we did this transaction. This is why the nonprofit took less money for the assets that it held. That complicates things. I don't know if Elon Musk actually wants to buy OpenAI. I think Elon Musk wants to prevent OpenAI from hitting that takeoff point where exponential growth kicks in and they reach AGI first, and then there's nothing left for anyone else, because it is a race to build the machine god, as we keep calling it, right? If we're trying to get to AGI or ASI, artificial superintelligence, once you get there, everything else may be subsumed quickly, because that in theory will have more intelligence than the sum of humanity and all of humanity's knowledge put together throughout history. Be smarter than everyone else.
AI is behind the ball.
It may be behind the ball, right? But if it is behind the ball, and this isn't a legitimate attempt to buy the OpenAI's assets, what are you doing here? You're slowing down the process.
Yes.
From it acquiring the resources to reach that breakneck speed so it can move out further ahead of the pack. So if that's the case, Grok AI getting killed is bad for Tesla, because that's Tesla's AI system that it wants to use long term. If Grok AI falls behind, it makes that piece of software, that asset, less valuable for Elon Musk moving forward.
Can I ask a question that just a philosophical question? What the world's smartest AI or super intelligent, what's the definition of smart in that context, or intelligent? In other words, what if the intelligent conclusion is end all human life? Is that the smart? Is that considered smart? Smart by whose measure?
Therein is AJ in the Matrix debate.
I mean, what is the definition of smart in this context?
Well, I assume we're doing like the Isaac Asimov robotic ethics, where we do no harm to people kind of training.
Well, and in a sense, the Musk-Altman dichotomy is very much a part of this conversation. OpenAI and Sam Altman have clearly been advocates to say, let's keep building, let's keep developing, let's keep shipping, let's keep releasing. This is how we are going to get more and more people to define what the right guardrails are. Whereas Elon Musk has said, whoa, 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 hold on, slow down. We're going to build the robot messiah here, we think, but it might kill us all. So why don't we slow walk this more? So there's competing visions. Trump
executive order today to lift all guardrails and just say, autonomous agents and murder drones all around kind of thing? See what happens?
Sounded like it.
Like, in other words, I thought that the Trump administration's posture was, who are we to regulate or to create a moral code for AI, build the biggest, most smartest, fastest, most amazing version of it, and if it does bad things, so be it.
Well, and in this sense, the sort of sniping between these two guys, both of whom are in Trump's orbit, both of whom are doing business with the administration, really seems to highlight this. They might be at this point almost as children fighting, and dad saying, you know what, let them fight it out. Somebody's going to get a black eye, and that will be the one that doesn't prevail, but you all go ahead, sort this amongst yourselves.
I'm buying Tesla.
Well, that's
between now and the murder drones. I'm
TLDR.
I'm buying some Tesla stock. I'm going with the Spivak nibbler, even if it's a little early to nibble.
So there's the Vecchio ape shitter and the Spivak nibbler.
The Vecchio ape shitter, that thing pays big money. When you catch I've only caught one ape shitter in the last 2 years.
It's been a good one, though.
It was a damn good one. I'll never forget it. Jobs report, October 2023. Friday morning. It was a beautiful day. Got the full ape shit. It was like a Batman signal.
When I like lay in bed at night, I like look at the text and like S&P 4236. Like, oh, what a good buy. What a great buy. Still chasing that high, Dylan. It's just
Most
like
people either watch Instagram reels or porn, and you're watching your historical your entry points on your S&P trades before you fall asleep at night on your phone.
I'm watching Futures Power Hour from that Friday.
From 2 years ago.
Yeah, Dylan. So look, as Elliot points out, this is I'm trying to signal from the noise here, right? Because the technicals look terrible. If this wasn't Tesla, and you're looking at it from a pure fundamental perspective, you'd say, oh, German car sales are down 50%. Yeah, and like China sales are down 11%. And ever since he was up on stage pouring his heart out to people, or Nazi saluting, or whatever you're interpreting it as,
whatever that thing was.
Apparently, there's a
when was the Nazi salute? Was that the top?
20% ago. It was actually that was at the inauguration. So we open up here. That's the open. I could suppose we want to measure it to the close on the 17th. So 426.50. This event is on the 20th. But ever since then, right, there are websites that have been tracking Tesla sales in like Germany, France, Italy, Norway, and they're down double digits over the past 3 weeks on a year-over-year basis, and they fell off starting January 20th. So the share prices are down. Coming into today, we're down 18%. We lob off another 6% today. We're over 30% off the highs here. We could talk about him eating the EV competition because of all the tax credits getting removed, and no one else is going to break into the space. But maybe Dylan, you're right. Maybe people are paying more attention to the fact that as a car company, the numbers are moving in the exact opposite wrong direction. That said, if this is related to anything OpenAI, it doesn't look like
full self-driving could become a commodity. I mean, within a few years of its invention.
Yeah, I mean, look, if that to me is the whole reason why Musk is backing Trump. Like Trump says he wants to cut red tape. Harris and Biden were all about slowing things down, environmental reviews. Let's make sure that this endangered species of butterfly, isn't going to be wiped out in case. Well, actually, let's not exaggerate here. They needed to do a multi-year study on what happens if some rocket fuselages fall back into the ocean and they hit a whale. And that was something that the government asked them to do, which, should we worry about killing marine life when we're doing our stuff? Sure. But statistically speaking, a rocket tube falling into the ocean and killing a whale, sorry, that's just one unlucky whale. It just sounds like
they're fucking with him. I mean, that just sounds like they're fucking with him.
Right, but if I'm walking down the street and a meteor hits me in the back of the head and kills me, tough shit.
Tell you what, I'm going to figure out what happens if this thing should hit a whale.
Yeah.
I'll see you in a few years.
Yeah.
So if you want to get to Mars,
if this thing hits a whale, we should play the lottery. I mean, the lottery's got to be better odds than a fuselage hitting a whale.
But that's kind of my response too. No joke. A few months ago, I pulled 3 blue M&Ms out of an M&M pack. And I'm like, holy cow, this is crazy. Because if there's one blue M&M out of every 30, and I just pulled 3 in a row, the odds of me, okay, I got to go buy a scratch-off ticket. And I did, and I didn't win any money on it. But you kind of got to live in those probabilistic terms. If you're going to be a trader, you don't think
maybe you should have tried to throw something at a whale.
Right? Better shot of landing on a whale. So Musk wants this deregulation kick is the point we're getting at. He wants to be able to go to Mars quicker. He wants to be able to send humans into space quicker. He wants the Neuralink technology to be pushed forward faster. Does he want OpenAI itself? Maybe, but maybe he just wants to slow down OpenAI so Grok doesn't lose ground and ultimately it doesn't nullify the immense value that Grok AI has been providing to, him and his company. It's ultimately going to be the bedrock that Tesla AI rests upon. So he needs it to be the best, and he can't. If a company comes out and says, if GM comes out and says, hey, we're going to be using OpenAI's AI AGI in our cars moving forward for self-driving vehicles, Tesla becomes all of a sudden just another car company that's struggling. So we're not there yet. It's a long way to go. It's worth point of discussion here today, maybe for half the show, because it's a market that doesn't really move otherwise. We talked about it at S&P. We gap open lower at DeepSeek Monday. We open up there at 6102. We're at 60.92 right now. The S&P today churns, twirling towards freedom. The NASDAQ off by 0.25%. A bit of an inside day. We're off the lows, but we don't push up to new weekly highs. Ilya, you've been very adamant about this being a range-bound market. Can you please give your typical 45-second disclaimer on if you're short from the highs or long from the lows? Sit on your hands.
I mean, that's essentially the only thing to look at here, and I remain completely unrepentant in that assessment. There is nothing that's going on here, and vol is not even at 17. So there's no premium to extract in a sideways move. I mean, I guess you could play for vol expansion. That's about the only thing you could do here. But why would you? If you're already long from near the bottom of this range, you haven't been proven wrong. If you're short near the top of this range, you haven't been proven wrong. So what's there to do here with no vol to pull out of? Really only selling an iron condor and look for the vol to open up, but how would you time that? Difficult to say. We've been in this sideways range now for going on 2.5 months.
Dylan, you have any strong feelings about the headline indexes here not doing anything of much recent?
No. I mean, I look at it as a positive, actually. You know, I look at it as I look at this more as a failure to go down. Like you can look, the thing with a flat line is you can look at it as either a failure to rise or a failure to decline.
Right.
And in my instance, I think that there's been more reasons for it to go down than to go up. And so for me, the fact that it hasn't gone down, it's like sideways is the new up in the era of the Trump administration. And as long as the market can even tolerate the level of rhetorical madness, which the reason it can tolerate it is because obviously the policy aspects of it are pretty ambiguous or non-existent. So, I mean, it's part of the reason why I think Tesla is a nice stock to buy.
Dylan, can I revisit a thesis we threw out on the Monday of DeepSeek Monday?
Yeah.
That if this was moving into a phase 2 AI space, then we would see distribution within the headline index for a little while, because the heavyweights that carried us here were a lot of the phase 1 names. Mm-hmm. And as we change leadership batons, it means that there's going to be a bunch of churn in the market. Mm-hmm. And so if phase 2 is here, then it should be a lot of sideways chop before ultimately resolving to the upside. Mm-hmm. We are at the opening levels there still. We're at 60.90.5 right now. Again, we opened up DeepSeek Monday at 61.02 10 points in the S&P at these levels is, that's nothing. So I'm with you. It feels like right now there's still good distribution in this market. The breadth obviously is holding up, all things considered. Names like NVIDIA are starting to pull back in and rebound. It would be very helpful if a name like Tesla started to participate. That's doing no one any favors at this point in time. Mm-hmm. But I look at this setup right now and I see we're still hugging our moving average envelope. The moving average envelope is still pitched higher. We have that nice intraday recovery off of the 1 month moving average. I got to stay long here, Dylan. It's not comfortable being long. Feels like there's a lot of false starts, but it feels like that's where the balance of risk lie. Like we're taking and absorbing all these body blows. And I suppose, Ilya, tomorrow the only thing that would be a problem is CPI. Although you said something today on Futures Power Hour about CPI. Mm-hmm. You're less worried about the market reaction if the print is hot. You're more worried about what it would be if the print was cold.
That's right.
Why is that?
Well, take a look at ZB here, because I think this is the picture that means 1,000 words. Take a look at the bottom. That big green candle, that's the last time we got a CPI number. And it came in only a little bit cooler, just a bit. And the markets went, whoa, okay, hold on. And then the other big green candle was last week. that was those very surprisingly soft service sector ISM and S&P Global PMI numbers that told us the one part of the economy that is strong, the one part where inflation then is locked, and the one part that is absolutely essential for global growth because nowhere else is there any kind of economic vigor, that it's weak suddenly. And the weakest in a year as far as the pace of economic activity expansion. And so the only other sort of comparable day in this entire sequence is that middle green up candle that punches through the moving averages envelope, and that's DeepSeek right there. So this entire rally, this 8-week high that we hit on the bonds and commensurate an 8-week low that we hit on yields last week came together really over the course of 3 trading days, of which one is the DeepSeek shock, which never really withered away in bonds like it did in stocks. But the meat of the move is 2 days, CPI and PMI. And all of it is telling you either one of two things. If you want to listen to Fed Chair Jerome Powell tell it, it's telling you that uncertainty around the rates outlook is ebbing, which means the term premium is cooling, and that is why you have lower yields and higher bonds, because that's coming out of the equation. I mean, okay, maybe that's a cute interpretation. It doesn't seem like it's the likely one when you look at, in particular, the response to the PMIs, which were very weak, and what the front end of the curve is doing, which is nothing, implying that indeed the Fed is gradualist, it's not going anywhere fast. This seems to anticipate that, much like we saw at similar juncture last year, around mid-April going into May last year, that a Fed resistant to easing in the immediate is being judged as likely to ease more later. And when you see that kind of price action and that kind of a signal come out of PMI data that's exceedingly weak and surprisingly weak, the upshot seems to be the Fed should be easing now in the market's eye. They see some sort of a cyclical concern somewhere 6 months, 9 months out. They think that delaying now is the wrong move, and they think it'll be more easing later. If that's the interpretation that the market is in fact giving us, then if you get a soft CPI number here, much like you got a month ago, the response would be, oh, well, there's that cyclical concern. If stocks come off on a weaker CPI number, whereas they should be cheering because it means the Fed might get to cutting sooner in the sort of older paradigm, if they haven't heard Powell pound the table on we're not going anywhere fast for weeks now, including today, and if the response to a soft CPI number is, okay, there is a cyclical thing that's not going to get addressed until it's too late here, that'll be a very different read. It's not a 0.3 month-on-month CPI that I think is the most concerning to our conversation from Futures Power Hour, whereas the baseline is 0.2, and that would be even keel. It's something that's lower, 0.1, 0.15, even 0.21 or 0.19, something on the low end of normal. That already would be something interesting if stocks were to take it as a bearish cue.
Rates are at the line in the sand right now. The uptrend from the September, October, December swing lows that we started to break through just last week, we're right back up against it. We're kind of poking our head through it today too, except for the fact that the 1 month average of rates, that's there sitting at 4.534%. We never quite scaled it on the close today, sitting at 4.532. but it's pretty darn close. So you talk about CPI day arriving when the market is more or less trying to pick a direction. This could be the affirmation that rates are now heading back up after what was a false breakdown here, or this is the retest. And we're going to head right back down to the 4.4% level. And this is merely the breakout return before we reload and then swing to maybe 4.15. But getting rates lower from here would be exceptionally helpful for a number of different things. It feels like that's very much an oil story, though, because as oil's rebounded here the past 3 days, that's when yields have abruptly turned around. Still, and it's a 6.6 IVR, so this isn't really worthy of discussion from a tasty trader perspective. There's not a lot of vol here to sell, if you will. Better opportunities on the board elsewhere. But oil continues to move up. Trump's talking about a potential peace deal with Ukraine and Russia, how he's sending Treasury Secretary Scott Bessent over there to negotiate with Zelensky for U.S. protection in exchange for access to rare earth minerals, it seems like. Zelensky is out today suggesting that they are open and willing to talk about land swaps with Russia, territory swaps with Russia. Dylan, are we looking at the oil move from the start there?
The selling, I don't know. I mean, I'm a little bit. Yes, the answer is yes, we could be. It's less black and white than I'd like it to be. This is, how do I say this in a way that makes sense? A degradation of the Hamas situation or the Gaza situation, which seems entirely plausible, would seem to be a more meaningful trigger to run oil higher that then would be a chance to sell it. And I think, and the reason I hesitate a little bit is I feel like there's a reasonable chance of a further rise in price before it goes lower, as tied to the plausible short-term emergence of a degradation in the Middle East, to speak with all sorts of colloquial and sterile words. But
and after the presser today with the king of the king of Jordan, that's, I think, a path that makes a lot of sense.
Yeah. So I think you're good to watch, but I would wait for a little bit more chaos out of the Middle East and then sell it.
I got, as we talked about earlier, Chris, I got out of my short here today and took profit. It's been a lovely ride from 77-ish to here, and I'm good for now. I took this off earlier today for exactly the reasons that Dylan is outlining, and of course the technical damage done. We're back into that congestion area. We're really on the last line of former support become resistance type of a defense. If we find some sort of a conclusive evidence of a turn back down, I want to be a seller. I expect, though, that Dylan is right, and we do see some degradation in sort of the chaos premium in that theater, and so we get some sort of a further bounce, but ultimately there is no desire for a bilateral Israel, Iran, or U.S. plus Israel versus Iran conflict. And so ultimately the thing fizzles. And I want to be a seller, just not at this very second.
Dylan, you raised a really important point yesterday about, like, how does Trump work? Trump likes.
You mean the door in the face negotiating premise?
That, but what you said about how he likes being in the center of attention.
Oh yeah,
his deadline for the hostages to be returned, lest all hell break loose, is this Saturday at high noon. That means that we as market participants will be paying attention to the news flow over the weekend, because if the hostages aren't returned on Saturday,
it's hard to see how oil doesn't remain bid into the weekend.
That's kind of what I'm getting at too, right? Like, if we're thinking about how to play oil here, I see a 6.6 IVR and I go, oof, would I really want to fade this from an options perspective here? And taking a step back, we have these conversations. Sometimes this is directed to the audience, so you can understand how we work through things as traders, right? So we have a 6.6 IVR. Looking to capture any volatility here to collect premium, you got to be really careful about how you do it. If you want to fade the oil move to the upside, are selling calls, is that the best way to go about this? Well, knowing that we have this high noon deadline on Saturday, a day when the markets are closed, is there a chance then that if that deadline passes and Hamas doesn't return the rest of the hostages, that Trump green lights U.S. aid or Israel to resume bombing? What if Iran says, oh, because Israel started the attack, you get some headlines about some missiles flying there? What if the United States decides to go after Iran directly because the deadline's passed? And they say, you know what, Hamas, we're just going to deal with your boss. And they just go straight to management. They pull the old Karen card. And we go start going off of Iranian military infrastructure instead to kind of send a message. This is the president that killed the Iranian general back
Soleimani or whatever.
Soleimani. Yeah, right. Like at the start of 2020, and that quickly went out the window because we were all then thinking about COVID a few weeks later. But you know, if I'm trading oil,
Tehran has not forgotten, by the way.
Am I selling calls? Well, yeah, there's still a price tag out on Trump's head and on John Bolton's head
and Mike Pompeo too.
Mike Pompeo, Mike Pence, right? The Trump administration from the first term.
Yeah.
Anyone tied to foreign affairs, basically. So the point I'm getting at here is, okay, when I want to sell calls in a market where there's low volatility facing this geopolitical event risk, heading into a weekend where there is a deadline for something that could dramatically cause a dislocation in price while I have no ability to manage my position. So I'm not where's my wrong button? So if you're shorting this, like you're doing it short, like MCL, you're holding it short. If you're going to be short through options, they're much longer dated. That way, if anything happens this weekend, you're not looking at yourself staring down, oh my gosh, this expires Monday. Now I'm $4 underwater and I'm short a bunch of calls here. That's probably not the smart thing to do. Dylan, you packaged all of that into the one eloquent thought, which was, am I interested in selling oil? Yes, but I think that there's a potential for further price expansion, so I'm not going to do it here. I think finally, oil, we have a reason to, I don't want to say anticipate geopolitical risk. Oil prices could move up without the ensuing vol expansion, but trying to fade this bounce the last few days, that may prove difficult given the news flow that we have ahead. And so I'd much prefer not to do it still, and I'd much rather stay long deltas in energy here than look to fade any price movement that's offering very, very little by way of premium selling.
I mean, the tragic situation, though, is let's assume that there's a deal over the weekend, which hopefully there is, then oil will be, I would think, flat or lower on Monday. Let's assume there's not a deal over the weekend, then oil will probably be sideways or higher, and that's the point at which I would actually want to sell that's when I would want to sell the calls.
There's also like the whole notion of like what Trump's trying to achieve here. He just sat down with the Jordanian president and said like, oh no, they're the Palestinians are moving out. Jordanian king, right? The fact of the matter is like we can slice this up however you want. There are people out there who are going to look at this and say this is ethnic cleansing to a degree. There are people in the Middle East who are saying that right now, that if this plan were to go through, Egypt has talked out in strong terms. What does this mean then for regional stability moving forward? Is this just a negotiation? Is it the door in the face thing, Dylan? Or is this legitimate? Right? So that's why in terms of fading this doesn't feel the way that oil did for much of 2024. Like we need to see the event come to pass and see how it starts playing.